Um, what's up, guys? I'm gonna start. I wasn't gonna stream today. I'm gonna go. See if we can't get this bounce here. Couple different plans from Microsoft. It seems to be the one that's moving the most right now. So that's why I would more so focus on Microsoft. But I'd like to see if we can get a pullback into the 100-day moving average. If we can't, you've already seen that this level's held. 340. Gotta watch 340 for a long. 350 short. Looks like they're getting in front of that short now. So, um, yeah. See if we can get a bounce back anywhere up into this area to get short. Gotta watch 340 though. 4 or 5, 6 point move would be nice on Microsoft. Um, that's what I'm watching. Google isn't really moving. I'm gonna go make my coffee and I'll be right back. Tesla, AMD, just a couple on the list. I don't know. I'm kind of just waiting for tomorrow and Friday because the market feels like it's waiting on more data that we have coming out for it to pick a before it picks a direction. It still has earnings, data, all that fun stuff. So I feel like we're just stuck in a range, and looks like we just broke out of it. So if you can see there, that is a pretty nice wedge that it just bounced off of. So I'm going to keep that up on my, because this level is key. If we ever get up to 325 and can hold it, that would be huge. That would be huge. So this is a key area there. We get back up into it during market hours. I'm going to look to get short. See where this takes us. I'd look for it to get down to 420 on the SPY and still sit in this range. I'm gonna go make my bagel and I'll be right back. It's pretty simple though. If you just oh yeah, and this is the 200-day moving average here. So we've broken below that. Watch for it to become resistance today. All right, watch for the S&Ps to turn that 200-day moving average into resistance. Just watch. I don't think we move. I don't know if we move much in either direction. Um, why is this not doing this for me now? All right, what's going on here? All right, what's going on? Now it doesn't want to work. You gotta be fucking shitting me. All right, I'll be right back. Alright guys, good luck today. I got Microsoft. How you doing, Chris? Um, let's see. Let's see if Microsoft falls right out the gate here. I'm really curious if it does. Look, all of my stuff is... Dude, this is crazy. It's not going below... Oh my god. It's always something, man, I swear. So really nice pop and fade here at 346. It's a nice short area for Microsoft. Fuck! I missed it. It's going, guys. That was it. That was your short right there, guys. Right into that 345. That was it. You had to get it right on the open. And here she goes. Pulling right back into 340. I'm going to have to wait for another bounce back, guys. That was a really good trade if you would have got it. It would have paid you really nice. God, you guys understand. I could just fucking scream right now. I really could. I really could. Just ride it down to 340. I mean, you're going to get some bounces. If you do get a bounce opportunity, look to take Microsoft short. I don't know what Google's doing, but I know Microsoft's moving. So that's where my heart was at, I guess you could say. Take it right on down to 340. Unbelievable. Unbelievable. It just fell out of bed on me. I didn't have time to take it. I brought it up. Even as it was going red, I still tried to take it, and I'm like, no, it just went it just went too far too quick. Come on. Let's see. Yeah, there's a break of the 100-day moving average. Right to that support level. It's like 327.50. I would wait for a bounce back if you get it. That's the only thing you can do. Like, that was it. I'm telling you guys right now, if you did not take a trade on anything off the bell, that was it. That opportunity is gone. Probably end up closing it up for the day. The day's done. That was your move. I'm sorry to say it, but that was your move. On all of them. You got Powell after, at like 4 o'clock. I mean, I don't know how much. And why I say that is because the S&Ps and the NASDAQ are probably going into support. They have a little more room to the downside, but I don't know. That was some nice continuation. Let's see what I know. Well, see, I don't really want to watch Tesla, but come on, man, please. All right, so Tesla is up there testing its 200-day moving average. Look at that quick rejection off of it. Look at that quick rejection on Tesla, guys. That's what you want to see. That's a really nice setup. That's a really nice setup. Did you see how quickly it bounced off of that 200 day? I'd look for this to get down to like 210, 212, 213 area. Still so expensive. There's no way. So I want to see Microsoft, get back down to these areas. It did hold. Wow. Um, what a trade. What a trade. I still think it's gotta press up to it's gotta push down to 340 and put in its support level there if it's gonna hold it. If it doesn't do that and it goes higher to like 350 first, I will get short up there at 350. Let's see if it puts in a double top here. Mm. Yeah, I just seen that move around. I was like, whoa. Yeah, this thing's popping up, man. It's got some nice volume to the upside, but I can't do it. Um, I think we can let them send this thing as high as they want. I mean, you have a clear double top up here pre-market at 347. So if you start continuing to struggle at like 345.95, 345, then I gotta load up on the short again. Thinking about taking it now, but I'm trying to be patient a little bit. Fuck. Because I feel like this is an area. Now look, it's holding. So it's holding this area as support right now. Right here. 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 Right? Sorry, I was just trying to finish this bagel. But support. We break it. It comes back up. Now it's trying to reclaim it. So. Watch 344.50. If it can't hold, maybe a retest will bring in some high selling volume, like an increase in selling volume. Is that a double top there? It's what I think it is. Yep. Wow, man, these fucking options are still so expensive. I mean, they like just that little bit of downside. It just. It's crazy. Like they were 50 some cents, now they're they're at 80 cents now. You're paying 20 cents a contract more. So I think that could really I think that could swindle some of this price action we're going to see. I think here it goes. I'm going to put one on. See if we can't get a pullback here. I am in, and I probably top ticket, and we're probably going to get a bounce. Fuck. I am short. I'm probably down on it. Yeah. I'm going to take a piece off if I'm able to get a piece. Yeah, they top ticked me on that thing. And the spreads on this are pretty crazy, so watch out. Jesus Christ. It tries to give you the worst fills, guys. It tries to give you the worst fills. Alright, I took a piece there. I got a nice fill. Nice. Should start to give way here. Let's see. See if this holds. This is going to tell us whether or not we got some strength. There you go. I like that rejection real quick to the downside there. I don't like how it's. I mean, you're gonna. It's better for you to put out some limit orders, but I missed. I mean, you're talking 20 cents already from that pop up at 345 to where I entered, which was not too far below it. These were very low 60s, high 50, like 57 to like 61, right? On this pop. I tried to get in. It just, it happened so quick. So, I am going to try and hold this. I'm gonna like not give it a whatchamacallit. Alright, I'm taking another piece right there, guys. There we go. This thing could start going. I got 3 contracts left on this thing. I got 3 contracts left. That's weekly 335s. I'm just gonna take it there. I'm just gonna take it there, and I'm out. I'm gonna look to see where if I can get a re-entry in this. I want to see if I can get a re-entry in this. So I am not in Microsoft much more. Again, the game plan is still to see if we can pull back into 340, 339.95 area. I'm looking to get down here. But if I can get another test of VWAP. See, you've broken this level. Here's what I would look for on this. I took puts on Microsoft. The 335s for this Friday. My entry was really bad. They filled me at 82 cents. Was my fill on those. And you had a chance. You can get it up here for like high 50s. 60 cents. Very low 60 cents, high 50s. And as time goes on, as we start getting closer to 10 o'clock, you're going to be able to get these probably even cheaper. This is why I took it off on there. I feel like you're not getting the... Look at this low volume down here, right? And you're not getting the increase in volume to get like a follow through to the downside. And when this thing just pops, those options just, they suck. Because of the implied volatility, they get drawn down on the pullback. So when it gives you profit, you got to take it. But I'm going to look to see if I can re-enter these. Again, I'll still stick with See, I like the 335s because like the 340s are pretty liquid, but the percentage gains were there on the I was just watching the 335s and noticing how they moved. You got a lot of people sitting down at 330s. Do not buy those 330s for this week. If you get a 330 puts, get them for next week. You should. You should really think about next week if you're going to get 330s. Because it's not going to get any... I don't think it's going to get anywhere near... It could, I guess, but I just... You're going to get... Because the problem with those 330s is every time it draws down and you get paid and it pulls back, you're just going to be red. 330 is too much for Microsoft. So I felt like 335... I thought 335 was too far. Right? That's down here. I still thought that was too far. If my target's 340, then I want to be in like 342s, 340 puts. But I didn't want to pay that much for them because I was just watching. I was saying about how much I paid for them. I can't even say that. Because it doesn't make a difference if I buy 5 of them or if I'm buying 20 of the 335s. You know what I'm saying? So, because like, if I'm going to buy the 340s and spend $200 and I buy 10 of them and I'm spending $2,300, well, a 20% on $2,300, 20% on that, it's going to be $400 or $500 in between there. So the 335s, I'm still like, you know what I'm saying? So it's like the math is a little bit different. I didn't put up as much capital, but I also would like to see follow through, and it could go against you. So you know, it's just the way I do it is like I would much rather um for somebody that wants to worry about like not losing money. I don't care if you got to buy one or two contracts closer to the money. Grab that entry at the right time, and collect on that downfall. You know, like it's just it will pay. So there you go. You went from 80 cents to 118 now on the ask. But look how much it draws down on those tails, right? It's down to 106 now. That's 18 cents. That's $18 a contract. And that's why I say I think those 35s are too far away. But I just chose them because they were the first ones I watched. And whoever is down, because you can see how liquid on Microsoft these 330 puts for this week. You can see how liquid they are. There's 4,000 in volume and 12,000 open interest. They're all selling. And these things are, it's going to take a little bit for them to move. I think that's way too far out of the money. Let me go back. The volume on the 340s were pretty nice. I don't know. I went with the 335s. I was in a hurry. And look, they're already back to 90 some cents, guys. That's why when you play out of the money options, you have to watch weeklies. Out of the money. All right, let's keep an eye on the S&Ps. Let me get busy here, see if we can't get a little bit more under our belt. Let's find something nice. Wow, look at the SPY. Are you kidding me? That was the move, not Microsoft. Holy shit. Fuck, man. Wow. Look at the continuation here, guys. Holy. Man. Sorry that I didn't see that. I'd much rather be playing the S&Ps right now than anything else. Alright, so if the Qs and Tesla are going to be weak, I want to play Tesla. Microsoft is strong. If the markets are pulling back like that, and Microsoft, you know, that's something I didn't take notice to. Tesla hasn't done much either. I don't know why that looked like a big move. What is going down for the SPY to be falling like that? Why is my charts doing this to me? Alright, so I think you should get some support here. Wow, guys. Are you kidding me? Holy shit. We're down 1% now. Alright, we gotta find out if it's the bank. Do you guys see anything? Like, do you guys know what's going on? I mean, it looks like a big move, but it's not. I mean, we opened at what? 421. It is kind of a big move. Holy. I just want to say it, but I can't. Holy fuck, man. Look at the... I did not expect this. And that's why you find Google, if Google's weak, that's why it fell out of bed like it did, Chris. Yo, why are my charts doing this, man? So that's why you're taking a really weak stock. I would see if it breaks up through this level here and you're able to get it back up to pre-market lows. Up at that 100-day moving average is where I would watch it. If it can get up there. I want to look at the banks and why? Yo, I'm gonna snap, guys. I'm sorry. My charts keep loading up and they load like to the left of the screen. Okay, JP Morgan's coming into support there. Or no, that's Baba. That's Baba, guys. That was actually a support area I was looking for. Um, dude, I cannot believe this. Look at the banks just fall. Are they? Oh, look. I thought it was halted, man. Is there bank news? You have a flat top support here. Look at this. Look at look at Goldman Sachs, guys. This could be a nice trade if you're able to get a bounce back. You have a flat top resistance level, a flat resistance level up here. Well, I know on the daily it's got a major level here. I'm gonna look at UPS also. I wonder if things are if it's starting. So I made a video Sunday. Um, so look at that, boom, 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 and now let's see if Goldman Sachs has starts heading to the downside. It's got room down to 289. You could look for a swing trade on Goldman Sachs. If you think the Dow and everything's going to sell off, I would look at the transports. If the transports are going to sell off, you would expect Goldman Sachs and the Dow to sell off. Yup. Look at UPS. Transports are about to get murdered, guys. This gap here is 20%. And you have like no price action here. You have 1, 2, 3, 4, 5, 6 days. That's it. Look at that chart. That screams, watch out. All right. If anybody's here, you heard it here first. You heard it here first. Watch out, because we're going to start heading to the downside. People are going to start getting ahead of this move. And look, we just fell out of bed there. Looks like we're struggling here. Yo, why are my charts doing this? Alright, so there's a support level here on Microsoft, but you have, I think you're going to start coming into an area where you have too much resistance. It's going to try to bounce and let it go. Let it go up to 350. Let it go as high as it wants. It's just going to be volatile. I think Microsoft's going to be... Why is this not fitting? Dude, are you kidding me?
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy. Even a term policy? Even a term!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-477
So we did get some data.
or visit coventrydirect.com. Thursday, November 2nd. Join CNBC's Evolve Global Summit. Learn how global innovation leaders
Dollar hasn't moved.
what's holding in this new era of business. Register now at
All right, 10 o'clock. Interest rate decision for Bank of Canada, 555.
Good Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Paul Quintanilla and David Faber back for you as the latest on the New York Stock Exchange. Take a look at stocks here in the early action. Some pressure.
All right, so what do we got here? Where are we at?
Sector that's higher. Slower.
Does anyone know? So they did raise. Okay, so they did raise.
Some big movers. Healthcare also.
Did they raise? Where? What?
Industries holding up a little bit better. So mixed picture. The
Benchmark interest rate in Canada last recorded. Okay, but this.
thanks to earnings movers.
So okay, July. So they haven't done anything. They didn't do anything.
Tesla's higher right now. T-Mobile
We're pausing. It's not a pause,
So a lot of earnings to sit through.
but we're pausing.
Session. Here's some other movers we are watching.
I wouldn't call it a pause.
Flying higher despite cutting at 7:30.
Just making fun of Powell and crew.
David Palmer
Um,
last hour saying the company is working through the challenges and will get back to
7.5. So that was actually
those numbers.
pretty decent year over year,
Which I mentioned is
and month over month was actually really good. Wow,
results. We're going to speak to the CEOs of those
wow.
companies later this hour. And General Dynamics trading higher. The defense contractor beating quarterly estimates thanks to strong demand for its artillery and armored vehicles. Stocks up 4%.
Not a lot of data today, but we are getting new homes. Let's get to Diana Ola. Good morning, Diana.
Good morning, Paul. New home sales in September took a much wider than expected jump, 759,000 annualized. The Street was looking for 680. That is up 12%
Are you in?
month to month and up
Sun Run hearing
33.9%
Carson Block
year
is
over
short
year.
the stock.
I'll say these numbers are based on signed
November.
contracts in September. That is people out shopping during the month, signing the contracts.
Come on.
We did see mortgage rates actually drop a little bit in September, below 7.5%. It's now that they've been climbing up in October toward 8%. So those people obviously taking advantage. But we did hear yesterday from the CEO of Pulte Group that they're buying down the mortgage rates aggressively. He said they're giving people around 5.5% on the rate. And this all happens as, of course, we know that the existing home supply at the end of September was at a record low, according to the realtors, and the builders are definitely profiting from that. The sale price.
Sorry guys, give me 1 second.
$18,800. That is down 12% year over year.
I gotta see what I got here. All right.
And also people are buying on the lower end of the market. Interesting though that the
All right, so we are starting to hold this area on the queues.
down from last month, so the builders are really going through what they have, the backlogs, etc. But again, this is a much bigger than expected jump at 759,000. So people are still out buying, even though interest rates are high. One thing we did also hear, I'll add, is that a lot more new home buyers, at least according to Pulte.
I would love to know why my charts are starting to do that now.
Back to you guys.
Yeah, I guess when you
That's a nice bear flag too on the Dow.
mortgage. Diana, thank you.
Um,
Oleg. A lot of earnings to get through.
let's
and
see
some
here.
commentary as far as what
I
they're
could
saying
put up
about
the
employment.
squawk
Also,
box as
Diana
well,
mentioned housing with Taylor Morrison. This is a big home builder. And
so we can get some of the news that is flowing.
the CEO. We acknowledge that the rapid acceleration in interest rates in September has once again injected some hesitation into the market alongside typical seasonal slowing. No surprise, housing is an industry that's feeling the impact of the higher rates, perhaps more than any other industry at this point. On the other side, there's the consumer. And we heard from Visa. Listen to what the CFO said about consumer spending on the call.
As we've said consistently, we're not economic forecasters, and so at a macro level, we are assuming no recession.
Wow.
We're also
What the
not factoring
fuck?
any impacts from Reg II and student loan repayments because, as I mentioned before,
AAPL, Apple TV Plus, Apple.
It's just not trying to give us a bounce back, is it?
gather more information with regards to these assumptions. We will
That's
continue to provide
AAPL.
updates.
I can't believe this. I don't know if I should get short. I can't get short down here.
and they're not expecting recession.
That would be stupid of me.
It really is a tale of different industries and different economies and a broad economy that is so far managing to stick a soft landing.
I just want to know what is going on.
Coming down, we'll know more at the PCE
I don't know if it's the banks or if this is our.
when we get the
If we're starting and we're going down to the low 400s, and maybe I should grab some.
it's getting what it wants. It's getting a soft landing with lower inflation.
I should have grabbed it yesterday. It's what I should have did if I was going to do it.
It just doesn't feel that great. Still feels less.
Get some swing some shorts. Like grab some, February, March puts. Well,
Especially when you're not seeing treasuries behaving as typical.
April, May.
We're looking now, yield at 4.9. So inching back up to that 5% level. It does feel like nobody wants to step out in front and buy treasuries unless we either have more clarity that the Fed is done, or that the soft landing can, that we're not seeing a bigger recession or some sort of bigger slowdown. There's like still unknowns on those facts, and in the absence of that, yields tick higher.
Yeah, jumping higher on the back of those new home sales numbers, the best in several years. I don't know if you noticed, refis actually went up last week, 1.8%. Even though mortgage
So Tesla and crew.
at this level, somebody's refining.
Somebody's refining, and there's demand for housing.
Look at Tesla. Wow.
If it's more cash.
Look at the strength in Tesla, guys. That's a double bottom, and it looks like Sunrun is.
As far as the direction of treasuries, obviously next week's going to be key when it comes
Dude, why do I have to do this?
to a meeting where there's a lot of anticipation, there might be a change there. But you know what?
Sunrun's tanking.
I can't even believe I've never said this. But there's on Wednesday morning.
What to do with Tessie? What to do with Tesla?
Treasury refinance.
If you guys see Microsoft or Google at an area, let your boy know so I can
The last one was July 31st.
kind of know what's going on here. I can't really watch. I'm only one person. I guess I could put it in a different different screen, but
Tony Dwyer said that the S&P topped at that time at the end of July because this whole fixation with issuance and supply and demand and term premium is very much in focus and could be a big reason why we're seeing these high yields. Next week. It's Wednesday on Fed Day in the morning. Come on, man. And again, it's usually like a nothing. Nobody.
all right. So if Tesla can hold this key area here, guys, I'm gonna take a long on Tesla to 217. Nah, it's already rejecting up there. It's going. It might just be an inside day out for it. I don't know if I'm going to be able to get.
With demand.
Just don't know if I'm going to get continuation.
Get to what's happening with the luxury consumer. Kering gave us a good snapshot. This is the parent company of Gucci.
Nice. I already have Tesla up here. Okay, so it's switching.
If you look at some of the commentary there, what we see so far in North America, not Gucci specific, is rather clear. Unfortunately, some
Reports
pressure.
their earnings earlier, now hitting a high of 64.96, up more than 3% following their earnings
See really an
report
inflection
earlier.
point for now on the
From
traffic
Uniform November.
of that.
Echo Delta
French
Uniform.
honesty.
Yeah, well, they're not the first. I mean, we've seen a number of the highest end luxury start to talk
Not
about
Hermes.
slowing.
Hermes was good.
Yeah.
Good, but
LVMH
was
but there you're talking. We talked about that last week, where the size of the business has tripled in like the last 7 years. It's impossible to keep growing revenue at 30% in a storied name. Even.
Yeah, and the fact that they're pointing out, we knew China was weak, but they're pointing out the North American traffic here, which I thought was notable and could be new because the luxury sector's held up better.
So it was able to go to the bottom of my screen, but since I started the stream, it's not letting me.
We just got in the last
I used to be able to take it, and it would just take this whole bottom out and everything else.
on the earnings call. Here's what they're saying about the environment.
For the fourth
I
quarter,
have way too many lines.
slow volume recovery amid uncertain economic conditions. September presented us with some encouraging data that the contraction in manufacturing is slowing and onshoring to the U.S. is on the rise. However,
This could be a really nice bounce. I would love to see this thing get some momentum, man.
strikeouts
Because if it does, we could get a really nice long on Tesla off this 200-day moving average.
They're all cautious. They're all on guard. They all talk about the uncertainty, but nothing appears to be collapsing. Is how I would sum it all up.
tale of two tech titans this morning. Microsoft's cloud business accelerating, but Alphabet.
See, that's a really nice, I would say there.
What was an earnings beat?
Man.
Numbers on the ad front, for example.
It's all good. It's all good. I'm just going to relax. Just going to relax. So if we can pull it back, if Tesla can pull itself back into here and hold at like 217.20, I want to take Tesla and long it. See if we can break through yesterday's highs. And I want to see if we can get up to like 223. 222.90s. Wait. I take that back. I don't know if we have enough buying. I'm not sure if we have enough buying yet. Might not be a play just yet. I think it might need a little bit more time. I don't want to forget about ARM either. ARM was another one that so let's see here. If Tesla breaks down, it's probably going to the 200-day, which I think it's going to. Here we go. Pop. Nope.
In your opinion, from Microsoft's cloud to AWS, is that a positive then, as we hear from Amazon later in the week?
I think it's a positive in the sense that overall cloud demand's coming back because you have to move to the cloud to get ready for AI. I do believe that Microsoft is in
I know you guys probably can't see all those. That's a nice level of support that if it breaks, let's see if we can hold this. Nah, it didn't hold it. Fuck. That sucks because this would have. Yes, look, they're coming in now. See if they start buying off of this level. This is where I want to be long Tesla. I'm gonna look to see if I can get a long here. It's still expensive, guys. Still expensive to get long this name. I'm gonna wait. I think that's a turnoff on trying to take a long on this name because of. I don't think you're gonna have very many people with the earnings that we just had. You can tell the volume's not really there. I can't do it. And I feel like there's going to be other people that are going to say there's no way in hell I'm paying $200 and some for, one contract when you have 2 days left until expiration, even though today's Wednesday morning.
Some people have pointed to it and said it didn't give them reassurance that, in fact, revenues are going to outpace spending in terms of growth.
Well, they're behind, at least in the enterprise AI.
So that's a nice resistance level.
Spend a lot more to catch up there. So that's pretty clear.
Boom.
We think again they're more optimized. They're seeing better efficiency as it relates to some of the other advertisers. So we don't necessarily worry too much on the expense side. On the advertising side, the cloud side,
average back hitting new highs now,
to catch up to Microsoft and Amazon.
Pulling
So
back,
that is absolutely there.
following that
But I don't
merger
have a big
approval,
spending
steady
concern
279
at
now.
Google from what we can see.
Let's see if it holds the 200-day moving average. We'll take it back to the S&Ps.
Any takeaways from Snap's comments that things may have slowed a little bit as a result of advertisers pulling back?
We're still really weak in the overall markets.
Meta and Google are taking market share. Yes, there's a pause. There's no question. Some advertisers are going to take a break.
Still really weak. How this didn't take Microsoft down with it, I have no idea. Come on, this thing is killing me, man. I'm glad I got out of that Microsoft trade. This thing just isn't doing anything. I guess It was Google. Google didn't do anything pre-market, and then I guess when the market opened up, it wanted to move, and then Microsoft was moving pre-market, and yeah.
We don't know, and that's the biggest issue. Nothing fundamentally we see right now is troubling.
So what are we thinking, guys? You guys think it'll pop to the 100-day moving average?
What are you on OPEX then for next year? What number are you using?
If the S&Ps can get a bounce,
I know the $100 billion,
or are we just gonna,
100 is the bar in terms of the bogey.
or we just gonna? I don't know if you're gonna go down much further.
Well, above that, people are going to be concerned.
I think that should be it.
You know, at this point.
All right, Brent, always appreciate the insights and the updates.
So this one earnings
Got some news out of Apple a few moments ago.
gave us, took us right back to previous earnings.
Goes from $6.99 a month
That's crazy.
$9.99. Also raising some prices on Arcade and News Plus. Those are the first price increases since their launch in 2019.
All right, so there's a bounce on Google.
The second bump in a couple of years. That's a 43% bump in the monthly on Apple TV.
That is, I mean, let's not forget that Netflix.
Oh, I thought it was trying to bounce.
Cracking down on
Um, do you guys see anything with momentum?
separating itself, really, Netflix did from everybody else. It was
I mean, I guess the S&Ps were the only thing that were
sort of, to me, the new
really showing us
fact that shows
some movement.
on other platforms for years suddenly become best.
That's a wicked looking pattern there on AMD.
But back to Apple
Looks like a spider or something crawling with like this, how it just curls like this
and spend
and then like this.
um,
They got messy.
they got that and Scorsese's movie. That doesn't come cheap.
No, pretty nice open, but not enough to compete with Tay-Tay.
Yeah. No. If you can get Taylor Swift, you can charge whatever you want.
That's exactly right.
All right. Meantime, for the rest of the world, we're going to continue to we will obviously continue to monitor for you the Israel-Hamas war. NBC's Jay Gray is live as he always has been with us in Tel Aviv with the very latest. Jay.
Hey, Ann, let's talk a little bit about the politics surrounding all of this. 12 of the 15 members of the UN Security Council voted yesterday in favor
Oh shit, ARM. That was the other one. Sorry, ARM.
humanitarian pause.
Alright, so ARM is starting to pull back off this level,
There was one lone
and it bounced into it.
U.S. saying
Man, I missed it again, guys.
because it didn't include language outlining Israel's right to self-defense. So there is
Damn
a
it.
real back and forth that is growing in the global community. What to do with regard to
This thing, like, is such a little... You know what?
group that provides the most
This is the second time, man. I was 2 days early. I was a little early here, and then boop, boop, falls out of bed.
who are trapped in the fighting there. There are 600,000 displaced people in Gaza that are receiving aid from UN
Let's see. I'm not going to sit there and get short when
of their facilities.
we can get the market to start bouncing back. I mean, if that wasn't clear, I don't know how clear it has to get that we broke that wedge. I thought I seen it. I thought I seen it a couple days ago, or yesterday. I'm sorry. I thought I seen it yesterday when I'm like, man, this would be a nice wedge into this area here to pull it back down. And that's exactly what we did. I just don't understand what the reasoning would be. Like, I really don't. Because I guess they're pretty certain that this guy's going to get elected for Speaker of the House. So therefore, it's not like we're going to get unless there's something about him I don't know. And he's not going to get a debt ceiling done, which isn't going to be good for the banks. And that's why I thought the banks were pulling back that nobody was talking about, KRE regionals. Because if the government shuts down, what's today? Wednesday? We get this data today. Boop, 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 boop. We get this today. And if the government's shut down, this doesn't get plotted and the banks don't get their money. So, look at that uptick. Bang. So, let's see. We're going to get another uptick. Let's see. Powell was just saying how well capitalized they are, but this is telling us otherwise. They're capitalized because of the Fed. Dollar's rising. Come on, man. This thing can bounce. I know it can. Look at the relative strength. It's got bullish divergence. And yields. The 2-year has bearish divergence. Like, look at this. You know, it's... Come on, dollar. Stop bullshitting us. We know you're gonna pull it back. I was charting this out this morning. Right? Look at that. We've been making higher highs on no, I don't want algorithm. I want...
Ever wonder what people with all the answers get all the answers? Ask Mark, accountants and advisors.
My plane has mechanical problems. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeured car plane side helps keep me on schedule. Hi, Jeff. With all the plane shortages, did you have trouble finding one? I never had.
So here is your bearish divergence, right? We're making new highs and the RSI is just dropping. I want to know when we roll it over. That day is going to come.
Surveyor is the Wild West. Who's the sheriff around here? For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you might get some useful information.
Alright, so let's see here. What do we got going on? What we got? Tesla, is it faring too well? It is. It decided to hold. I think it's just going to give you a... I think Tesla is just going to dance around. I really do. I think it's just going to dance around. Just don't know how much of that volume it's got the volume, but it doesn't, you know. Like, look at the selling volume, right? 2.5 million compared to like 1.3. And yes, it's got some consistency here, but you know, it's like, look at this 15-minute candle. Look at all this selling. Selling. Going crazy, guys. Going crazy. I'm sorry. And it feels like this area here, just let's see if we reject 218 or 219. Let's see if 219 starts to be too much. Let's see. I'm gonna watch for that.
What's going on with pricing? There's this narrative in the industry, and there's been some excitement around.
I will say this: the longer that we hold this 200-day moving average, you will start to see some people close short positions. The longer we stay there, and then you start getting close to the Thursday and Friday, calls get cheaper. You know, the little kids will be buying calls. So the longer you sit here, the more it does help your bull case.
We're delivering a fantastic network experience, and our new Go 5G Plus rate plans, which happen to be at the higher end, are also our most popular. So revenue per account's rising. And that
All right, what we got, guys?
that others might.
So I'm watching the cues here on another chart that I have.
Looking at raising prices.
I'll just pull them up here. Also,
But it's, what we're finding is that our most popular plan, 60% plus of new loading, is Go 5G plus and better. And that's amazing. We're attracting some of the best customers in the industry now with payment rates better than our peers and prime credit customers at all-time highs for T-Mobile.
Mike, a lot of focus
ooh, look at that, guys. Are we gonna bounce? That's a low volume on the 5-minute chart. I think you could see some downside, but just watch, because it could quickly reverse and go right back to the upside. Wow. That's crazy.
Why do you feel fantastic if, in fact, things are not coming in perhaps where they have in the past?
Well, remember, if you can have low upgrades and low churn at the same time,
Let's see.
that's the trend.
Let's see if the selling comes in. It's coming in.
A lot of money. And, we in this industry, because of all the competitive intensity, we subsidize phones to a great degree, including
Bang. Look at all that buying coming in, too. Trying to at that level.
upgrades for the customers who want
It's just really hard to say that we're going to sell off and go down further, because there's not much more room to go. Unless you plan on going, like, at least for the SPY, unless you think the SPY is going down to 314, 312 area.
low upgrade rates and low
You're a
churn.
beneficiary. I guess in part, though, our audience also cares about
So we're taking back this down day, or this up day.
the launch of the 15.
That's hilarious.
It was a big success in that it did drive
That's so funny.
And one of the things that's interesting is this new iPhone unlocks advanced network technologies that only T-Mobile has. So we have what's called I'm gonna geek out on you. Four-way carrier aggregation. That means the phone can talk to 4 different bands of our network at the same time. It's a breakthrough for an iPhone, and we're the only ones that have it. And that's going to feed even more speed and performance for T-Mobile customers relative to our competitors, which might mean that these low upgrade rates for us will have some durability into the future.
Some analysts had questions about taking share in rural markets versus urban. Can you talk about the difference between the two?
First quarter ever where we were the switching leader in rural markets. Remember, this is an area where we started focus on 2 years ago. We were never really big players in rural, and this is not just tiny towns. I'm talking about 40% of the country. Everywhere
This is insane.
markets, we were dead last.
It's already up almost 2%. Down morning.
We would eventually be the leading taker. And this quarter,
I just don't understand. I really don't.
taker across that entire 40% of the country.
I'm thinking long, guys.
Taker in the top 100 as usual. Just a fantastic breakthrough for
I mean, it doesn't have to be difficult, but
They're clearly taking wireless market share.
because if there's no long, like, just that's the other point to this too, is that just because something isn't shortable, or just because you can't get long something, there may not be a trade there.
We've seen some of the best performance ever in our history.
And I feel like I'm battling that right now.
Q3, our best Q3 ever in terms of churn. This quarter was the best Q3 we've ever had in terms of churn in the face of that very competition that you're speaking about. So we're performing through it
So it
beautifully.
may not be affecting you as much, but it's certainly affecting the broader industry.
It comes from prepaid, where again, we're growing in prepaid, 79,000 net adds this quarter, but some of
Come
that's
on.
I think some of that went to cable. And it's growing partly from switching from others. And I think some of it is that low calorie ads that we talked about. People maybe low usage lines, stuff like that.
Mike, for the first time in a while, people asked me to ask you about M&A. I guess you were asked maybe even on the call and didn't say no.
Sorry, I keep flicking the charts around.
Think you might be interested, or even Frontier, which I find a bit hard to imagine. But I'm curious, is it something you're actively looking at?
We never don't look. I have to say we love this strategy we've got now. So the bar is very high. I mean, this business is firing on all cylinders. We're in the middle of a fantastic shareholder return program from mining years and years of investment, creating.
All right, let's see here. Let's see here. Let's see here. Let's see here. Let's see here.
But we are interested in fiber and broadband. But so far, what we've said is we're interested in doing that.
What do you guys see making any moves? Do you guys see anything that's got any type of continuation or anything? Have you guys looked at like Alibaba with the Chinese
but not change who we are.
regulatory
Talk a lot about broadband. You're
stance that they're taking on a
growth opportunity here and the potential
stimulus.
emergence, right, of broadband and mobility.
Quarters in a row, we have been the broadband leader with more net additions than AT&T, Verizon, Comcast, and Charter combined.
Fixed
So
wireless.
of course we're excited about it.
Yeah.
Broadband overall. What we offer is fixed wireless.
Right.
All right, Mike. Thank you.
Great to see you.
Good to have you here. Mike Siebert, CEO of T-Mobile.
Still to come, about 50% of the stocks in the Dow Transports report earnings today and tomorrow. So we're going to take a closer look at what those companies could be signaling about a recession, whether the stocks may be worth a look right now.
I wonder. So,
That disruption and the averted Teamster strike at UPS, two major factors in the
I
price
wonder
action.
what's going on
Global
here.
chief economist Bill Lee says
So,
it's really time to rethink how we look at the transport.
hold on. Give me 1 second, guys. Um. So this area right here yesterday on the SPY was a key area I was watching. I'm going to show you guys. I feel like there's some, I guess there's something going on with, hold on. Hold up. Hold up. Oh, come on. Because, like, I breathe, if you breathe on this mouse, if you look at this mouse the wrong way, it will click. Thinkorswim's having to click through all their stuff anyway. It's not that cool. So 422.96, 422.95, 423. This was the zone. This was the area. So we broke out, came back up and tested it. This was a really nice area to reject from, to get short off of. Again, it did it pre-market, but now where would we look to get long? That's the other question. We don't have much price action down here. That's the problem. We don't have much price action down here. Let's see. Let me see if I can. Look, we're already past that too. We're already past all this. Wow, that's hilarious. Well, then we should be able to come up to here and turn that into resistance again still.
In the federal government, management is often the big challenge. Get the manager to do the right thing. It's a great concern.
The Chief Accountability Officer over the federal government, the United States Comptroller General.
Yeah, right here, 421.95.
The dilemma facing all Americans.
If we have another recession, the federal government doesn't have any more tools in its toolbox.
Hear these experts and more exclusive interviews with powerful industry leaders, esteemed economists, and top researchers at the Spring Mill Manor. Call Crash Proof Retirement, 800-722-9728 or crashproofretirement.com.
Our next guest says discussions of how restrictive monetary policy is should not only look at the level of the Fed funds rate, but also include forward guidance and balance sheet policies. Apollo Global Management Chief Economist Torsten Slok joins us now. Torsten, what do you mean? Are things a lot tighter than we're thinking that they are?
Well, that's a very important question, Sarah. But the Fed has this calculation where they say it's not only about the Fed funds rate, and it is also about the other tools that they have in the toolbox, most importantly about balance sheet policy and about forward guidance. Remember, those were new tools that they
I'm still here, just kind of just thinking about what it is I want to do. Not sure if you guys see anything moving or not.
They do find in their own calculations that the Fed funds rate today is not only 5.5, but it's actually 7. In other words, policy is a lot tighter than what they and we all think, simply because the other tools that they have are also.
All right, so I'd like Alibaba to see if we can get back up to this 8250, 8260 level.
Quite incredible how resilient the U.S. economy is. There are signs for the consumer. We are seeing in which
So I'm gonna watch this right here, guys. I'm watching this area right there. Right here. Just this range that we're in right now. If we break up above this pivot, look to make 350, 496, 355 support. Your next area is going to be like 355.96. It's like $1 wide. So that's how I'm looking at things right this second. All right, let's see if we're failing here. Let's see if we end up failing, and if we make a higher low or a lower low. I'm excited to see what happens here. That was a nice setup there. Came in on the lows. Came in, bounced off the lows. I missed that. It's a shame. They're buying the dip. They are. They're buying the dip, so watch out. What I would look for, now that we cracked that level, I want to see if we can get any type of continuation. Can't believe it's already 11 o'clock. If I enter this, I'll let it.
in financial markets. He also appears regularly on CNBC, Bloomberg, and Fox Business. Prior to joining Arbor and Bianco Research, Jim was a market strategist in equity and fixed income research at UBS and an equity technical analysis at First Boston and Shearson Lehman Brothers. Next, we have Keith Dicker. Keith is a CFA. He founded IceCap Asset Management in 2010 and is president and CEO. He has over 20 years of investment experience as a portfolio manager, focusing on wealth for clients all over the world. He started his career in Halifax as a portfolio manager with a large Canadian bank where he managed high net worth portfolios on a discretionary basis. Next, for 10 years, Keith managed portfolios for an offshore bank in Bermuda as the senior portfolio manager and head of global equities. He was responsible for sorry, my cat's jumping in my way. He was responsible for global investment strategies, including asset allocation, equities, fixed income, commodities, and alternative investments, and multi-currency. And before we start, just as a reminder, this material is presented for solely informational and entertainment purposes and is not to be construed as a recommendation, solicitation, or offer to buy, sell, or sell long or short any securities, commodities, or related financial instruments. Please contact a licensed professional before making any investment or trading decisions. And now that we're done with the introduction, let's go ahead and start. And how I do this is in a round. So we'll do a couple round of questions for each of you. Also, feel free to interject if you have a comment about anybody else's comment. We can make this as round table as you want it to be. And with that, we will start with Jim Bianco. So, Jim, let's start with the yield curve. This is, I believe, the longest or one of the longest periods we've been inverted without a recession yet. So, are we headed for a recession? Is it this time it's different? Are we going to uninvert? And where do you think yields are headed? That's a loaded question, I know.
Yeah, down, up, down, down. There's my answer for you. But seriously, yeah, you're right. The yield curve has been inverted now for about a year. The yield curve I'm referring to is the 10-year, 3-month yield curve. It inverted November 22nd of last year. This is the longest inversion that we've seen in a yield curve since the mid to late 1970s. So this has been very, very long that the yield curve has been inverted like this. We seem to be in the process of uninverting the yield curve. Uninverting the yield curve is otherwise known as a bear steepener, which is fancy talk, bond talk for all interest rates are going up, but longer term interest rates are going up faster than short term interest rates. If we wind up uninverting the curve, that means it gets back above zero, meaning long term interest rates become higher than short term interest rates for the first time in over a year through a bear steepener. This will be the first time in at least 50 years we've done it as a bear steepener. We usually do it as a bull steepener, which means rates are falling, short rates are falling faster. That we understand. That's the Fed panicking. We're going into a recession, cut rates like crazy. That's how you uninvert the yield curve. But this one, in the bear steepener with all rates going up, long rates going up faster, I think it has a whole different meaning to it. And this is probably why the yield curve isn't working. And that whole different meaning, I believe, is we have inflation. We have an inflation problem. And that's why you're starting to see long rates go up. Why are long rates going up faster in the last month or so? The conventional wisdom will tell us that it's about supply, that there's a lot of supply. I got in this business in 1985. You can go figure out how old I am right there from that. The first week I was in this business, I was told that there was so much treasury supply it was going to crowd out the market and interest rates are going to go up. 38 years later, we're saying exactly the same thing. It was true then, it's true now, it'll be true tomorrow, it'll be true every day for the rest of our life, that the treasury is going to be issuing tons of supply. I think it's more about inflation. Austin Goolsbee, who's the Chicago Fed president back on October 5th, said it's a puzzle, and I'll paraphrase what he said, that last year when inflation got to 9%, the 10-year peaked at 4.2%. And this year with inflation under 4%, the 10-year is at 5%. It's not a puzzle, Austin. Last year, you were raising rates at 75 basis points a meeting. The market didn't need to do anything. This year, you have said that you're done and you're going to let the market do the work for you. Okay, the market is doing the work for you, and it's not done. It's not done doing the work for you. It's going to keep pushing rates higher. How high do they think they're going to go? I'll take the Fed for their word that they're higher for longer, which means that the 5.25 to 5.5 funds rate is not going to be cut anytime soon. The highest point on the yield curve right now is the 6-month bill at 550. So where are we going? If we're going to uninvert the curve, we got to go.
Let's look at
our. Have to go to at least 551.
15
and probably higher than that. So I
minute
remain. I've been a bear for a couple of years on bonds.
Look at what it is that
I
we have
remain
going
a bear
on
bonds.
Do we think we want to be short,
I don't
or do we want to be
see,
long,
at least in the
depending
short
on
term,
volume
anything to
and some other
tell
things?
me that
Because
there's
again,
been a
just like
capitulation
yesterday,
in the
or a
bond
couple
market.
days ago, what
Because
did we
the
have?
way I look at it,
We have VWAP
most of the data says
coming
everybody's
in
long. I mean, to be honest with you,
and
everybody's
meeting
long
the
getting
9
their
EMA.
brains beat in,
It's
and they're
getting
doubling
squeezed
down
here.
on this bad bet.
So
and they're
we're
hoping
rejecting
that this bad
VWAP,
bet will work for them.
trying to
So
hold the 9 EMA.
that's been my
Which
take
direction
for
are we going to
the better
go?
part of the year.
Where is the
Actually,
volume?
for a couple of years on the bearish
It's
part, but the
technically
everybody's
to the buy
been
side.
long, and I'm waiting out
I
a
mean, at least
capitulation
right
on the
now
bond
it is.
market, and I'm going to stick with that
So
right now.
keep your
So
eye on that. This
you're-
is a really
just to
nice
reiterate
setup.
that last question, the yield curve is not working because this is a
What-
bear
what is-
steepener
what
to
price level is
potentially
this?
uninverting.
339,
Every other
75.
uninversion has been a bull steepener, with the Fed cutting rates because they were panicking that the economy was going down. This bear steepener, I believe the interpretation of that is we still have an inflation problem. And since the Fed is giving up on it, oh, we don't have to raise rates anymore. Let the market do the work for us. That's exactly why we're seeing rates go up. I'll stop there.
And then, since you brought up inflation, what are your thoughts on inflation? Do you think
If,
the Fed is going to be able to reach its 2% target? As in, are we over the hump
If
and
what
headed
you
for
call it is too
deflation?
loud, just
Or
let me
is
know,
this
guys.
going to be very sticky?
The 2% target was last cycle. That's over. We're not going back there. We need to recognize, as I like to say, the short answer. The biggest economic event of our
38.88.
lifetime was the global shutdown restart of the economy in 2020. It changed a lot of things. The biggest thing that we're all familiar with that it changed is work from home. And because it changed a lot of things, and technically the way I've argued is it took trends that were in place, like work from home, and sped them up. Nick Bloom at Stanford University he's been studying work from home for 20 years. Now he's very popular. He would say that we were trending towards work from home at 0.5% a year as an economy. But
Only I
between
could slide
2020
that
and
down.
2022, 25% of us.
All right, looks like we've
went
made this
home,
resistance
started
now, just about. We're
doing.
trying to
And
make
when I
a
say work from
resistance,
home, I
it
really
looks
mean
like.
remote work. I don't mean 5 days at home. I mean some kind of hybrid remote work thing.
Let's see.
25%
Hasn't
of
necessarily
us.
done it just
So as he
yet.
likes to say, we jumped ahead 40 or 50 years in the cycle in 2 or 3 years. Now we have to catch up. And so I've argued that the economy is perpetually out of balance, and that and I can explain that later, but in that out of balance means that we're going to have more frictions, we're going to have higher inflation. Not 8, 10 Zimbabwe levels of inflation, but 3, maybe 3.5% inflation versus 2. Why does that matter? Well, the Fed likes to say that the funds rate, its neutral rate, is 0.5 percentage point above the long-term inflation rate. They think the long-term inflation rate is 2, and they say, so therefore the neutral funds rate's 2.5. They're at 5.25 to 5.5, so they've got plenty of tightness in the market. I think if we were to adjust that the neutral funds rate's to 3 to 3.5, 0.5% above was
Why
what you
is
did
it
in a
doing
QE
this?
period. You should be 1 to 1.5% above the long-run inflation rate. So what I'm looking at is a neutral funds rate of somewhere between 4.5 and 5. Now we're 5.25, so we're tight, but we're not nearly as tight as everybody thinks. And that's why tomorrow we're going to report GDP. It should be 4%. That's the consensus. I'll remind everybody in June.
A reminder
consensus
that's
for
normal
third
to
quarter
still
GDP
have a
was
high
0,
GDP.
and now it's 4%. That is a massive change in the outlook of the economy in 90 days. Meaning, we don't understand this economy at all. We just do not understand.
Yes,
this
we do.
economy
There's just a
because
ton of
it's not the
liquidity
same
holding us
economy
up.
as
That's it.
2019. That's why I think we get the initial claims numbers wrong. 18 of the last 21 months, payrolls have beaten. You know what I just said with GDP. We do not understand this economy. It is stronger than people think. It has got more inflation. That means we're going to have higher rates. And I'll just tease you, that's not necessarily bullish for stocks, because stocks have to contend with a do-nothing option of 5.5% on money market rates, and maybe higher if on bond funds if they continue to move higher. So you might say, yeah, the stock market, the economy's doing good. We got earnings, and maybe you're going to say, so what? I could get 2/3 of what you're going to offer me in the stock market in a money market fund with no market risk. You're not worth the other third. That's why the stock market's struggling, not because we're expecting a big dive in earnings.
And with that, do you think the Fed has another rate hike this year? It kind of seems like lately they've backed themselves into a pause corner with their comments. Yet the market, as you said, we're expecting 4% GDP. The economy is going strong. So it seems like they are going to have to raise rates again. What are your thoughts on that? And then which camp are you in the soft landing, no landing, hard landing scenario?
A no landing for the last question. No landing, I know that's the metaphor for the airplane. That's what we do 90% of the time. The plane doesn't land. It does not come down. A soft landing. First of all, I would actually argue too, there is no such thing as a soft landing. That's when the plane's 5 feet off the ground about to crash. That every soft landing is the beginning of a hard landing. But no landing just means we just continue to pump out positive GDP numbers. That's what that means. That's what we do 90% of the time. I'm in the no landing camp. As far as the Fed, you're right. They have backed themselves in a corner. They keep mumbling words about long and variable lags.
A short?
That policy
Google?
works with long and variable lags. Actually, count me in the short and immediate for policy. The reason that they're not seeing the bite from interest rates, which is what they say is long and variable lags, is because they're not that tight. They're not that tight. I can explain that a little bit later. And the other problem that they have is 18 months after they've started raising rates, they're saying we got to pause
to the
and we have to
100 day,
assess.
but I doubt it.
What these rate hikes means. Are you going to pause for 3 years? Because one or two meetings of pause isn't going to tell you anything more than what you know today. You'll have to pause for at least 18 months at this point to figure out what the rate hikes to date have done.
I need to do better.
And I think when you
feel like I'm
do
not
that, you're
getting
going
any
to
better.
realize
I need to learn
not
how
a whole
to
lot.
edit. I need to do
And
a
that's
lot
why
of
the
different
economy
things
continues to go. So
have
yeah,
to
they're not going to
actually
raise
make a
rates next
place that
week.
people would like to go
Probably
to.
not going to raise rates.
First off, we got to make some money.
December.
It's been a little.
I'm still of
it
the
happens to
opinion
every
that there
trader.
might
Don't
be
get it
a
confused.
rate hike
you know,
or two in 2024.
You know, when you're, it helps when you have a
we'll
group.
have to
I will
see,
say that.
You know, whether or not that comes about. Last word about 2024.
Find opportunity when you have a group.
It's an election year. The Fed doesn't raise rates in an election year. Actually, if you look at it, the Fed has a repeating pattern over and over again. It's an election year. We're not going to do anything. Then something happens in the election year, and they do the most extreme things they've ever done in an election year. 2020. It's an election year. We're not going to do anything. Then we have a pandemic. They immediately cut rates to zero, and they do the biggest amount of QE in human history. 2008. It's an election year. We're not going to do anything. We have a financial crisis. They cut rates to zero. They institute QE. They bail out the banks through TARP 20 days before the election. 1980. We're not going to do anything because it's an election year. Do we have inflation? They take the funds rate to 21.5. And I forgot, 1992, Greenspan raised rates in 1992. George H.W. Bush wrote in his memoirs, he blames Greenspan for losing the election. So, yes, the Fed will start January 1st and say it's an election year, we won't do anything. And then circumstances force them to do all the extreme things in an election year. So I'm not saying there's going to be an extreme thing. What I'm trying to say is don't let this idea that
So
next year's
if
an election year
Alphabet corrects
think that
this
that's
level,
going to
guys,
change anything.
you still have a
They do it
minor
all the
level
time. They move on
here.
election years because they're forced to. If inflation is a
See, it's
problem,
tough
they'll be forced to
because
move
that
in
is
an
a
election year,
support
and they will.
level. So I'm not sure.
Excellent, thank you. And we will come back to you. I'm going to move over to Keith here for a little bit. Kind of wanted to talk about, let's talk a little bit about the Canadian housing market. Obviously, it's what everybody talks about, has been talking about. We saw September prices push up again after falling for 3 months, and it seems like there's no end in sight for this bubble, even with higher mortgage rates. So where does this all end, and where do you see this headed? Another loaded question, I know.
Yeah, absolutely. Hi, Jim.
If
Nice to hear your
if we
voice
start
there
making this
again. And
resistance
Tracy.
now,
Oh,
I would
by the
look
way,
to get to
listening to my
low a day,
bio
guys.
earlier and then
126.39.
hearing Jim reference, I think he said 1985. I realized I think my bio might be 10 plus years
I was gonna say, it looks like Tesla's getting ready to break out here. Let's see what happens. So you have some news here. Russian Defense Ministry says we are to start training on nuclear strike. We're fucking retards. Fucking idiots. Yep. Because you couldn't win the war any other way, right? Fucking dumbasses. And then the fucking they send it to the east of them or the west of them, and then all the shit comes right back into their country. So that's what's funny. I'm not sure when you put that, Chris. I'm sorry, buddy. I didn't see your question in chat, buddy. I'm sorry. Now I'm kind of waiting to see what we do here. You know, the volume isn't really there. I think we're just going to consolidate. I think we're just going to start marching back up to this area. And test the 422 area. I want to see if hold on. All right.
That's a pretty big business that a lot of people like to be in. So you don't have to go buy the CBOE, which I think is really what the article's about from Reuters.
Well, that's what it's about, but as the article suggests, and the headlines are deceiving, Sarah, and unfortunately people only read headlines in the world that we live in today, but if you read the body of the article, I've said what I've been saying for years, that we are in the strongest position of any institution that looks like us to do M&A deals, and there's going to be a lot of people shopping those deals towards us, and it doesn't mean we're going to acquire them.
But if you guys didn't get that news, news came across that Russia will be preparing for nuclear strike, going towards them, sending one away, whichever. I don't know. Don't really care. I think people are just starting to get annoyed with Russia. Like, seriously.
There's so much uncertainty around the world. You know, the energy sources, we're already looking to import, oil from, places that we never thought we'd go back to ever again, and we're back there. So hopefully that.
I wonder if I can take these. I like to not have as many lines on here, but every time I add a line somewhere, it goes on all the charts.
It's up significantly year over year, and I don't see that backing off right now in lieu of what's going on geopolitically.
I remember when after Silicon Valley Bank failed, you came on and
So
railing against the management.
pre-market is up here.
Hedging their interest rate risk. Has that improved?
Let's see if we so we rejected. Where's oh shit, I forgot about Microsoft or Google. Oh no.
I don't think it's just the regionals. I mean, everybody's got risk on their books, so no matter how big or small you are, you need to manage that because you never know.
That was a setup that was headed. Watch. So the 15-minute chart on Microsoft was really nice. So here it goes. It's starting to break down now below the 9 EMA. So it was stuck between both of them, and it didn't even try to bounce back. This thing's just selling off all day, guys. It still is in the area where you got some buyers. That's why I didn't step in there. But I couldn't hold that stock because I wasn't. It's not that I wasn't sure what we were going to do. I didn't know what the market was going to do. So.
This will be a Terry Duffy opinion, not a CME opinion. Of course, I own them. I still believe that they're a very safe haven because you look around the world. What else are you going to buy? Where else are you going to put your money?
But yeah, I'll let you guys know if I do anything else. I don't know how much more downside you have on Microsoft. I don't know how much more you're going to get. I'm surprised. I mean, I could see you getting down here to like 337. But as you can see, you're going to start getting some buyers to step in here. This could be a double bottom. See if the market itself tries to reverse. And we bounce to the upside. That's another nice rejection there, though, off of this low. Let's watch. You start taking out the lows, Microsoft's got more downside.
had a zero interest rate. Now we're seeing it with rates going up. So I don't see people going away from the largest market in the world, which is the U.S. Treasury market. So we might have back and forth, but it's not going away.
All right. That's what we wanted, the Terry Duffy opinion. Thank you very much. Always appreciate you joining us.
Thanks, Sarah. Thanks, Carl.
Chairman,
Thanks,
CEO,
Terry.
Sammy.
Coming up after the break, California suspending Cruise's autonomous driving permit. What a halt of its robot taxi service might mean for GM and Google's Waymo. Stay with us.
Tesla's breaking down now.
General Motors robotaxi service Cruise now no longer allowed to operate in California after the state's DMV suspended its permits. Deirdre Bose has been following that story for today's Tech Check. What a story, Dee.
What a story indeed, and more details are emerging. The question being asked today by the DMV and public officials is this: was there a cover-up? The incident under investigation involves a driverless Cruise vehicle that initially came to a hard stop running over a pedestrian. From there, it gets fuzzy. The DMV alleges that Cruise only showed footage up to that stop and left out subsequent footage of the vehicle pulling over a distance of about 20 feet while dragging the pedestrian under the car the entire time. We're going to show you an image of the fire department physically lifting the car off of the woman. Now, Cruise disputes this and says that it shared the full video, but the investigation has much broader implications for the entire autonomous driving industry. Here's what part of that landscape looks like. It involves some of the biggest names in tech that have been shelling out billions of dollars in those ambitions. Cruise, of course, is backed by General Motors. Its main robotaxi competitor is Waymo, which is owned by Alphabet. Others in the space include Amazon, which bought Zoox for $1.2 billion in 2020, Apple's rumored Project Titan that we know very little about, and Tesla's own, though very early, plans for a full robotaxi fleet. Now, Waymo and Cruise have been taking paid rides since August, so they are arguably closer to rolling out for the mainstream. Waymo already has the edge. Cruise's suspension now likely to widen that gap further. For all of them, though, the costs are high, the regulatory hurdles are many, but the payoff promise is huge. GM has said that Cruise could generate up to $50 billion in revenue each year starting in 2030. Elon Musk has used his robotaxi push to justify Tesla's valuation. Last point I want to make here, the backlash, you're hearing it now, but it had been building well ahead of this latest Cruise incident, and it could bolster the argument for other cities around America to slow or even resist testing altogether. And that would hit not just the end players who we showed you, but the companies that are supplying the chips, the LiDAR sensors, and other technology to them. A few of those names up on your screen now, like NVIDIA, Mobileye, and Qualcomm.
All right, we'll be watching them. Thank you, Deirdre Bosa. Up next, what can the Fed do about the deficit? Why the answer differs from the past. Stay with us.
I'm looking at a Tesla short, guys. I know it's a little late, but I think we can get below this 200-day moving average, and that's what I want to try and do. I want to try and take... Now, where's my... Again, we haven't really broke it, really, but... Shit.
Imagine numbers after the bell. Can the Facebook parent keep up the momentum after the stock's huge run this year? Breaking earnings and reaction. John Fort and Morgan Brennan. Closing bell overtime.
Of course I can't see because of the pattern that I have drawn up here. It's hanging on. It doesn't really want to sell off, but it could just out of nowhere get some volume. I don't know. That's what I'm thinking, guys. I'm not sure if I'm going to pull the trigger just yet. Now the 200-day is up higher. So 1, 2, 3, 4, 5. So this is 5. Look at that. That's really cool, actually. So Wednesday, Tuesday, Monday, Friday. So Thursday. Thursday's low is what we're bumping up against to with resistance right now. So we'll see if we can crack it, or if we stay below it. Then we'll just be stuck between that and the 200-day moving average.
Good.
Welcome back. The U.S. budget deficit showing no signs of slowing down, growing to $1.7 trillion in 23 from $1.4 in 22. Intense borrowing doesn't help the Fed chair's mission to stem inflation, but our next guest doesn't think there's much he can do to stop it. He writes this morning that despite Powell chiming in on fiscal policy during the pandemic, commentary now may just make unwanted enemies. Joining us this morning, Wall Street Journal's chief economics commentator, Greg Epp. It's a great snapshot, Greg, at how his stance and rhetoric surrounding this has changed over time.
Yeah, I mean, there's kind of an asymmetry there, Carl, right? I mean, like in the 2020, we had the pandemic, and yes, the economy was in a very dire strait. And Powell was quite vocal, saying, yeah, we need more stimulus. We need to help people out. And I get where that's coming from. The economy was in a bad shape, and the Fed had done all it could do. It had lowered rates to zero, so fiscal policy was the only game in town. But you could sort of argue, well, wouldn't symmetry require that once the deficit is becoming a threat in the other direction, that you say something? And apparently the answer is no. When Powell is asked about it, he says, we don't comment on fiscal policy. And is that the right thing? I know there are people like Larry Summers, like Paul Ryan, the former speaker, who would like him to speak out, but he has apparently concluded that there's probably no upside to him doing that.
What is the downside?
Well, I think he has tried since he became chairman to basically sort of like, I think his words are stay in our lane, essentially not comment on things that have nothing to do with monetary policy. And look, as you know, we're in a very polarized time, and the risk is that if you take a position on controversial subjects, it comes back to bite you. You give cheer to those who agree with you, but you make enemies of those who disagree with you. And, you know, the truth is, like back in the early 1990s, George H.W. Bush, Bill Clinton, these were presidents who were ready to listen to advice and make some hard decisions. Congress wasn't as polarized as it is now. Those aren't the times we live in now. I like to say that Congress uses the Fed chairman the way a drunk uses a lamppost, support rather than illumination.
I mean, the other risk, Greg, is, first of all, it is politicized, right? There are certain members, for instance, of the Republican Party that have taken a harder line against deficit spending than Democrats, and he doesn't want to get embroiled or lumped in with one of those sides. And the other is it's not clear whether it's having an effect on the economy. I think back when he spoke out about the need for fiscal spending, it was more to juice the economy. In this case, it might be having an impact on bond market and eventually may slow growth, but right now it's not clear that that's
I would love to say that
happening.
we have a cup and handle here.
Absolutely.
But,
it's not like the deficit is a clear and present
really
danger
ugly.
where the explanation
So
and the
I don't
solution
think
are
we
both
do.
fairly obvious.
This is not a
This
bullish
is in
setup with
Greece,
an increase in
right, where we're
selling
about
volume.
to face total bankruptcy and economic cataclysm. And, you know,
Just watch
it's
out.
necessary for people like a central banker to speak out. There are a variety of theories about why bond yields are going up. I happen to think the deficit's one of the reasons. A lot of people disagree. And then there's the sort of the counterintuitive reality that as far as the Fed is concerned, because most of this rise in bond yields is in the form of the term premium, as opposed to investors thinking the Fed's going to tighten more, that higher term premium actually slows economic growth and makes the Fed less likely to raise interest rates. So you don't exactly want to go to Washington and say, oh, that deficit that I'm really worried about, it means we're less likely to raise interest rates. That's not a message you want to be telling Congress right now.
And it also helps him because that's what he's trying to do, is slow the economy enough to get inflation back to target, which has not fully happened yet.
Yeah, but on the other hand, you know what would really help him now would be a little bit of contractionary fiscal policy. I mean, it is the mirror image of the period we had, after the global financial crisis and during the pandemic, when monetary policy was doing all it could do. Interest rates were at zero. The Fed was buying bonds, and it still wasn't enough to help the economy. That's when there was a role for fiscal policy. We're not in that world any longer. The Fed is doing all it can to get inflation down, which is too high, and a little bit of help from the fiscal authorities, higher taxes, lower spending would actually give the Fed a valuable assist here and perhaps make higher interest rates less necessary.
Greg, one thing he's said in the last few days is that the good news we've gotten on disinflation lately is just the beginning of what will be eventually necessary. I wonder, are you hearing that the 3-month annualized data we've gotten lately is durable?
We're going to get an important number out this week. It'll be the PCE inflation number. I think people are looking for that number to be constructive, but I think it's probably going to have a slightly firmer reading than we had from the CPI inflation number a few weeks ago. I think that if you sort of canvass the expert opinion, there's a view that we've probably brought underlying inflation down to around the 3% area, but there's a lot of, but we still have that last mile problem ahead of us. My own gut instinct is that we're going to have the Fed on pause at their next meeting, but they will keep the door open to having to do more because they themselves are not certain that they've solved that last mile problem.
The last mile problem. Yeah, same thing in e-commerce. as in monetary policy, Greg.
That's right.
Great piece as always. Great to check in with you. Thanks, Greg.
Great. Thanks for having me.
Of the Wall Street Journal. So we kind of been all over the map, but for the most part, holding 4,200 S&P has been the important key today.
We've also got strength in a spot other than defensives, because consumer staples and utilities are up, but financials are also rising today, and that, you know, obviously has been a question mark as far as a source of strength for the market after better earnings. We're going to get more coming after the bell, and as far as barometers, Meta, IBM will be reporting, UPS, Honeywell, Comcast, all out tomorrow. So busiest week of earnings continues, and the pressure on the market continues, and the 10-year yield is above 4.9 again. It's not 5, but it is rising. So we watch it.
Yeah, I mean, we started the morning around 486, 487. New home sales came in strong, and again, upside pressure, and that's done the kind of damage that we'll get. We're all pulled tonight as well. Some of the hallmark names that Santoli's been pointing out,
and we'll
very
get
sensitive to rates.
Q3 GDP tomorrow, which I think is going to be key because everyone's expecting a strong number. How strong is it, and does that set up for stronger growth in the fourth quarter and into next year?
Goldman, which started at 1.5 and slowly worked their way up to 4.6, just increases it 1 more tenth to 4.7 after the new home sales data. So big day
Everybody's
tomorrow.
been revising straight up, joining the Atlanta Fed GDP, which is at what, above 5%?
5.4 in Atlanta. Let's get to the judge who's in Philly today for the half.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, live today from the Schwab Impact Conference right here in Philadelphia. Thousands of registered investment advisors are here, including our very own Jason Snipe. He's going to be with us in just a few minutes. He's on the stage now, but he's going to make his way over to our platform when he is off. The rest of the investment committee debating the markets today as well. The mega caps, of course, Microsoft and Alphabet, as they trade in opposite directions today. And the stage now set for Meta this afternoon. There is lots to discuss for all of you. With me for the hour today, Stephanie Link, Joe Terranova, Jenny Harrington is with us, and Katie Stockton of Fairlead Strategies is here at Impact as well. It's nice to see you. Thank you for joining us. So let's check the markets. By now, you know the story. The NASDAQ is where the bulk of the damage is today. Look at that. Down near 2%.
I'm going to look for a
That's
bounce
loss
to
of
VWAP
236 points. Yields are very much a story
on the
today as
SPY.
well. Backing up
And
yet
see
again
if we
towards
can
5%.
reject it.
There's 491.
Let's see if
The
we
10-year
bounce a
note
VWAP
yield.
and get
However, Joe, I do
rejection
want to
at
start with
VWAP.
Microsoft. That is the story
That's what
today,
I-
or certainly
that's
one
what I
of the
wanna
stories,
watch for.
at least the positive story today. Azure cloud revenue growth accelerating for the first time in a couple of years because of AI. You own the stock. Give me your take.
Well, it's good that we saw our cloud services growth back above 28%, which was the expectation that I had on Monday. That's where it needed to be. But overall, the impact of what we expected from Microsoft on the market itself, its ability to stabilize the market, it obviously is not present. And Scott, the reason it's not present is these stocks are called the Magnificent Seven. Now we're down to the Magnificent Five. We've lost Tesla. We've lost Alphabet. We'll get into the reasons why we lost Alphabet in a few seconds. But just overall, for the ability of Microsoft to stabilize the market, and obviously the reason that it's not, you needed all of the Magnificent Seven to push up against a lot of very troubling signals within the market itself. I think we've done, at least myself, I've looked towards this Magnificent Seven and I've looked away from the troubles. But what's going on this month in real estate? What's going on this month with the banks? What's going on with the financials, the response, the reaction to earnings? And let's remember something. The reaction to what is very good earnings so far has been horrific. We're seeing the revenue growth at 4%. We're seeing the earnings growth at 7%, but stocks are not reacting accordingly. And that's why we're in a very uncomfortable place right now. 4,200, the technical level's holding us up, but the rise in yields, we're pushing up down against that, and we're below the 200-day moving average. Look like we're going to close below it for the second time in the last few days.
Yeah, Joe makes a lot of good points, Jenny. So give us your view. We're barely above 4,200. We're teetering a little bit there. The tech trade, I don't know if it looks tired to you, but these stocks have done so well that these earnings reports we're going to have to be knock it out of the park, so to speak, to keep up the momentum, and it just doesn't look like that's going to be the case.
Yeah, so I don't think it's just tired, Scott. I think it's thoroughly exhausted. And it's really interesting when I take Google and Microsoft versus my portfolio yesterday. So you've got, Alphabet, where they had amazing numbers, right? Like they beat by $1 billion on revenues, earnings came in 10 cents ahead, stocks down 9%. Microsoft plus 26% on earnings, stocks meh. And I think that is because when they're trading at 30 times and 27 times and they're up as much as they are on the year, they are thoroughly exhausted. Then I take that and I look at what happened in my equity income strategy yesterday, and it's kind of stunning. Yesterday I had Verizon, 3M, Nextera, where I own a convertible preferred, and Dow, and they had perfectly lovely earnings. Nothing spectacular, no up 26%, but you know what? These guys are trading at 8 times earnings, 10 times earnings. And you had Verizon, where all they did was beat by 4 cents, stocks up 9% yesterday. That's crazy, but when you're trading at 8 times earnings with an 8% dividend yield on it, there's no exhaustion. So I see what's going on in the last 2 days as actually meaningful, and I think it is rotation out of those that are exactly as you said, tired, exhausted, and into those who've been waiting on the sidelines. I think it was Andrew yesterday morning, Andrew Ross Sorkin, who said something interesting when they were looking at Verizon pre-market. And he said, I was driving and listening to the radio, and he said, oh, I didn't know the market allowed Verizon to go up. And I think that's felt true for a lot of these kind of old line companies. All they need to do is give solid earnings, and I think there's significant upside ahead. So I see a rotation in leadership developing.
All right, so Katie, it's a perfect segue, I think, to you when Jenny uses words like total exhaustion, right? You make your living looking at the charts. It's certainly at one part of what you do. You're overweight tech, the XLK. How do we view these now as these reports start to trickle in?
Well, I would disagree. I think it's actually pretty encouraging to see Microsoft, which is an absolute behemoth, gap up on its chart. It's gapped up through some short-term resistance, and that's right around, I'd say, current levels, really. So as long as it holds current levels, it will have a short-term breakout. And then we have the final resistance really within reach for Microsoft. Imagine a market in which the major indices are going down and Microsoft is making new all-time highs. That would be hard to imagine given it's the second largest component in the S&P 500. So I wouldn't minimize the price action in Microsoft today. It does show a reaction to oversold conditions. And we also have to keep in mind that Alphabet was really the one that hadn't really corrected yet. So I don't want to say it's a positive, of course, to see it gap down, but it hadn't had that same level of a corrective price action.
You make a good point there because it was up 14 to 15% since its last earnings report, or roughly thereabout, right, over the last 3 months. So to your point, it had really run up into the report.
That's right. So it was more overbought. So you think about coming into a report overbought. It's a harder sort of, I guess, proof point for the market. And of course, Microsoft was relatively oversold compared to Alphabet. So we are encouraged by the action. I think tech has maintained the relative strength on the large cap front. What we really need to see from the market now is for that to expand to small and mid cap tech.
All right. So in other words, Steph, don't give up on mega cap just yet, right? I mean, that's essentially Katie's message here, is despite what you're looking at, which looks ugly in the NASDAQ today, Microsoft is a pretty good tell. The momentum is still there. Stock could push to new highs in her estimation. What do you think?
Well, I think, they're very over-owned, right? So I think that you have to keep that in mind, but you are getting growth. I mean, Azure at Microsoft grew 29%. It accelerated from 26%. Even the PC business rose 4%, which no one was talking about, which, by the way, is positive for the stock I own, which is CDW. Google, Alphabet, same thing. I mean, you are seeing substantial growth. So if you see some Meta, I think you're going to see also substantial growth. The same thing with Amazon. And I think on a pullback, I'm looking to add to all of these. As you know, I'm underweight tech, but I'm looking for opportunities because I think this is where the growth is going to be. And I think as they pull back, the valuations get a little bit easier to digest. They're not cheap by any means, but they are behemoth. And they have a lot of tailwinds going with them, especially AI, which we're in the first inning with.
You know, you make a good point, and you said it yesterday that, the big question was if these stocks pull back, in your mind, they would be bought. That's in part what was going to hold them up. in the face of some turbulence within the market. And then today, I see that you bought Alphabet. You bought Alphabet, which was down, I don't know, what is it down now? 9% now? It's the worst day in about a year, at least. So why does Stephanie Link buy Alphabet today?
Because you have growth, you have a great company, a fabulous management team with a great balance sheet, lots of cash flow, and the stock's on sale. And that's what I do. I like to buy the number one or number two company in any given industry. And when it pulls back for whatever reason, if I think my thesis on owning it, if it hasn't changed. And to me, they just reported 46% earnings growth, 11% revenue growth. Advertising, which is 80% of the company, grew 9.4% and accelerated for the last 3 quarters. That's what I care about when I think about Alphabet. Cloud, I know, is important, but it's 13% of the total revenue of the company, and it still grew 23%. I understand operating margins and why people are upset about it, because they were a disappointment. That's why the stock is down almost 10%. I'm using that as taking advantage of that and adding to it, because I do think it is attractive for the long term. I think they will be a very big winner in cloud. I think you have the big three. They're all going to win. And any given quarter, one takes a little bit of share, the other takes a little bit of share. I think this is actually absolutely an opportunity. And you know, I always say earnings season is silly season. We see overreactions all over the place. And we're going to talk about another one that I bought in the B block. But I want to use my cash to be adding to good companies.
But the third place player within cloud, I mean, you can make an argument now, especially where AI is going. The third place player can't afford to lose market share. And it's already third, right, in terms of the cloud. Here's a call today from Monness Crespi Hart as they downgrade Alphabet to neutral, and I want your reaction, Steph, to it. Well positioned to capitalize on the digital ad trend, participate in the cloud's growth, innovate with AI, benefit from digital transformation, and leverage a leaner cost structure. However, regulatory headwinds persist, competition is dynamic, and we believe the darkest days of this downturn are ahead of us. Wow.
It's pretty bold. I don't know how to address the regulation. That is an overhang on just about all of these companies. And so, you know, these guys have a lot of cash. They can write a check. So I don't want to dismiss it, Scott, but I kind of discount it. And I do think that the bulk of this company is still in massive growth mode, right? So if you look at search, up 11.4%, YouTube up 11.3%. I mentioned that overall advertising accelerated. So I think the fundamentals are going to win out eventually. They are going to have to spend a lot of money to gain more share in cloud. But at the same time, they've got this engine at the company that is just doing very, very well. And so any given quarter, operating margins are either up, down, they disappoint, they upside surprise. I think that they can rein it in if they really want to, and I suspect that they will after the reaction to this quarter today.
Joe, I go back to where some of the commentary has been about Alphabet relative to Microsoft when you have this conversation. It's Bing versus Bard, you know, and that's a whole different argument. No one cares today about ads on Google. No one cares about YouTube today as it relates to Google. People care about where these companies are going in terms of AI, who has seeded it in part of own Alphabet as well.
I like what Steph is doing here. She's recognizing value in the pullback in the stock and taking advantage. I did think about what Brad Gerstner has said about Alphabet and what he did with his. On though, what we witnessed what's inside the earnings of the things that he was were actually to Steph's specific to the cloud. I think there are other positive within the business, and have some cash, a quality company, and your get situation is coming in that
conversation that I had with Bill Ackman last month Alpha, where he was perspective, the trade that he made, and versus his own perspective. A weakness right after all of this AI, after Microsoft and OpenAI, deal. Ackman used that to buy more. So I get that there are two sides of it. It just comes, Katie, at a time, these reports, there's no room for error, right? There's no margin for error with a lot of these stocks for the very reason that, we've watched them run up. I mentioned the gains year to date on all of these stocks are just enormous. Microsoft 42.5%, Alphabet 43%, Amazon 48%. You start getting into Meta and Nvidia, you need to talk about more than 150% gains.
Well, the fable really rests on Apple, right? Apple is the biggest constituent within the S&P 500. Now, I like Stephanie's willingness to revisit these stocks into weakness, though, because that's hard to do. It's when sentiment is somewhat bad, right? And people are scrutinizing these earnings reports. A good rule of thumb in terms of gaps, when you look at a gap down, if you see Alphabet in particular rise into that gap within the next week or so, that tends to be a positive. It suggests that it's actually overdone on the downside short term. So we like to use that metric in terms of revisiting these stocks.
I don't know
Jenny,
why I didn't take
Meta,
that with Tesla.
now the stage is set and maybe the
think it was
pressure's on
more
even
so to
more,
do with- I wasn't
right,
sure
for a
if I
stock
was
that's
gonna
done so
get it.
incredibly well.
I
But
think
after
so.
what we just got and the reaction in the market,
It's really challenging. So remember, we owned Meta this time last year when it was trading around $90 a share.
this is
and
a
as
cup
it
of handle,
shot up,
guys.
we've trimmed it a couple times this year because that is
That's
just
a-
prudent portfolio
it's not a
management.
low
So
volume
now we sit
pullback.
here today
The
with a stock
volume
over
is-
300, and we're balancing out what's out there. On the one hand, you've got 19.3 times multiple on it. You've got 6% free
There's
cash
your
flow
cup.
yield.
There's
Earnings
your
for
handle.
2024 are going to grow by
But
about
it's straight.
25%.
You guys notice
25
how
should
the
grow by
price
17%.
action
So from a math
really tight
perspective,
together?
you have a pretty reasonable
See, this price
valuation
tag has a boop, boop,
and
boop,
really
boop, boop,
compelling
boop,
earnings
and
growth.
it's not like
On
up
top
there-
of
like,
that,
it's not like
you have 42 state
candles
attorney generals
for the
that are
most
suing,
part
saying, "Hey, this is
here,
predatory to children."
I don't
And
think
think it's
we're
an
gonna get a
interesting
bounce
thing because
higher,
they're saying
but-
the reason it's predatory is because it's
Because
addictive.
you
The
would see
software is
it a little bit
addictive.
clearer.
The platform's
Let's look. Oh,
addictive.
this is
So
a
a
1
year
minute.
ago, everyone was saying,
Look at a
"Hey,
5
nobody
minute.
wants it, nobody uses it." Now they're being sued because it's so well used that it's considered addictive. It's a really tough kind of
need
balance right now to figure
lower
out what to do
volume.
about Meta going forward. I think we're more likely to use it as a
See,
source of
this
funds
pullback
rather than add
needs
to
to
it,
be low
but we're not
volume,
selling it quite yet because that
increasing
math
volume
is really
on
compelling.
the
One
upside,
other
which
thing
you
on
do
the
have.
predatory and
Lower volume
addictiveness,
on the handle.
this is hard for me personally to deal with.
Kinda have
As
that
a mom,
too.
my kids have
It's
no
ugly,
Instagram,
but-
no Facebook, nothing. For me personally, I love
curious.
it. I think it's
I am
great,
really
and it's a wonderful way
curious
for me
right
to
now
stay
to
in touch
see
with
if we
friends who I
start
wouldn't
rallying,
otherwise.
guys.
So I really see both sides
It's
of this
ugly,
platform, and
but-
that, frankly, echoes back to the investment position on it, which makes
kinda
it hard.
there, I
I think
guess.
it's a challenging investment right now.
Right.
All
All
but
right.
the math is there.
okay. Yeah, Steph, I know you've been trimming Meta.
Well,
over the last 6 months at least.
No, not
so
because
now
of
how are you
Google.
feeling into this
Yes.
quarter as you
Not
use the
just
opportunity?
not
Because remember,
because of
like
Google.
let's remind people, right? You had
I
sold
think
Alphabet
Microsoft
originally
means more to the
to
market
buy
than
Meta.
Google does.
We had a big debate on the
If you had
program
to
about
ask
that.
me.
So now you're back in
I just think
Alphabet. What's the state of your
the
Meta
way
position
that,
here?
with
I mean, I still like it. I
police
think the
stations
advertising.
firefighters and teachers and schools and just everything. Well, I think Microsoft is more of a whatchamacallit than anything else. So I think I don't know what the market's doing right now. I really don't. I feel like I don't know what the reason is to just sell. That's my question. Right? Why not wait to why aren't these sellers stepping away at like 435, 430 and letting it back like why are they not stepping away here at 419? Right? Why are they not stepping away at 420? It's just maybe we're in a position where there's no buyers. But I figured you would have at least more nibblers and more buyers that are just nibbling on like lower prices. And then the selling come in at like 430, 435, 450. It's like I feel like we're just gonna sit in this range here from 418 to 425. I didn't expect us to break 420 today. I did see this, right? I did see this slant, this like pennant. But you know, GDP is going to be higher. It's like, maybe it's because earnings aren't as good, right? But Netflix was a complete blowout. It's like, why, right? The market moves for a reason. We could still be in this consolidation phase, and then here at 1 o'clock, we just start riding right back up to 425 end of day. You know what I mean? The only thing I can say is, like, you know, obviously rates and energy. We can look at oil to see where oil's at. But there's usually more of a reason. Like, that would be more intraday things. What's up, Basic? Like energy being up one day could be a reason for the market to pull back. But, like, what is the reason? Right? What is the reason? Like, you have... The Senate has someone that they're saying that's going to get voted in, who's not going to have an issue. So now, like, the chances of a government shutdown are starting to look a little bit better, right? It's not looking like that's a step towards progress. We didn't get job numbers. I guess you had 1 month of new home sales spike. Like, it's 1 month. Like, it's like, come on. Like, let's be real. Like, is next month it could come in lower. I don't know, man. I want to know why the market. I still think we're in this range until we're not. You guys know what I mean? But it feels eerie because we've broken this low here, and we just cannot hold the 100-day. I still feel, or the 200-day moving average. I think we need a reason to get moving to like 410, 400. And you know, I don't know. I don't know. This is I'm a little frustrated. I wasn't looking at the SPY when we had this pullback. When we had that pullback there.
Listen, my bias is still, I believe, we are going to have a recovery. We are going to have a price rebound
listen,
in the
you know
fourth
what?
quarter. I think a lot of it comes after November
and that's
1st.
What my thought
when you hear from the Treasury, when you hear from the...
Was the expectations that earnings aren't that... Like, here we are. Like, because I was always under the belief, and I was told this. Like I heard this from Tony Dwyer. And Tony Dwyer has always been, like, at least from when I heard him say it, and me physically watch the market, he's been right? When you had earnings beats and like pretty much like decent earnings to like good earnings, the market has always went up for that quarter, right? Like, you know, until, you know, the market would, whether it had pullbacks along the way, but from that quarter and you were just continuously getting decent earnings, they were surprise beats and beats and beats, you know, it would rally. You would be higher than where you were the next earnings session. So I feel like now we're starting to get that earnings pullback, and this is where it would come from. That would be my thought, right? Because we haven't had real data like initial jobless claims or Powell, right? It's not like Bank of America raised rates, so it's not like a worry of Europe and this and that. Like, the dollar, say like we have ECB rates tomorrow, the dollar should start to pull back a little bit, I think. I mean, rates are still where. So yeah, I'm with you with that. That's my thought. And Meta hasn't had a chance to sell their products, so the dollar is up a bit, but I'm seeing like this divergence that's like. Maybe I'm wrong, right? Maybe it's not going to happen. But on the euro, you have this bullish divergence, and that would be that would be bearish for the dollar, right? I still think we get a small pull. Well, I just moved it by accident, so I thought we were going to get a pullback here, and that would make our dollar go higher, right down here into this gray box, and then we bounce, right? I still think we bounce, because you've seen this bullish divergence here to the upside, and it's there. So I was expecting a pullback, right? We pull it back, which the dollar would go higher, which would pull the equity markets back like they are right now, and then we get to like this area here at like 41.26, like that low 40 number, and then bounce, and that would cause our dollar to pull back like tomorrow, Friday, and into Monday. But yeah, I would agree. Well, I mean, but we don't know how like Prime Day went. We don't know what Amazon's and Meta's earnings are, so you kind of can't. The market's not going to discount something that it doesn't know, right? Unless there's like real uncertainty, like you have economic numbers. The only time the market's going to price something in that it doesn't know or has an idea on was like 2021 or 2022, right? When we were getting economic data, CPI and PPI, and the economists were getting the expectations completely wrong. Like the market did not know what we were going to get, what CPI was going to be, and they were just way off. And that's why the market was so volatile, pulling back, because you were seeing consistent CPI rising, and then finally they were able to get it under control. You've seen volatility kind of slow up, and then banks. I think the biggest fear would still have to be the government shutdown, because then that still will take you right back to banks. Because if you have a government shutdown, the government's not open, and therefore, if they need money and liquidity, the Fed's not open for business to give it to them. So, and this is regionals here, which has been getting hammered. I don't know. I really don't know. I'm not sure. Maybe people are broke and they need money. So maybe we're still in the range and we're just getting ahead of ourselves. I don't know. Yeah, see, like energy and oil rose a little bit today. Wait, unless... So yeah, like look at the Dow. The Dow's not doing bad. So we could just be seeing rotation. That's the other one. The Dow is down, but we could be seeing rotation into like healthcare, things like that. Like let's look at healthcare. So that could be it, because it could be a switch from tech to let me look at like like look at UNH, right? Like UNH is ripping today. UNH is big green. Okay, so there's the Qs. It could be a lot to do. There it is. It could be semis, right? Nvidia. That could be what's going on today. There could be profit taking on Nvidia, and you're going to start seeing some rotation. I think that's what we got. I think that's what specifically today could be. You could, let's see tomorrow if you start to see, I mean, you're seeing it right now, but like UNH, you're starting to see Dow names starting to lead. So maybe the second half of the year, or the last quarter of the year, you may start to see some, see, it's not doing as bad, but they're not buying it. Boeing's, they're not going to buy Boeing either. Yeah, like healthcare, Verizon, like communication. Yeah, see, like there's that's Visa. Sorry, VZ. Okay, Verizon's up. Communications down. What about utilities? Even though, so yeah, you're starting to get a bounce in utilities because they're just been beaten down. You could be getting like some money taken out of semis and being put in other places. I think that's what today in specific would be, because I don't think it's and we'll see what Powell has to say as well, because it's not like we are just, you know, it's not like there's a lot of volume is what I was trying to say. I mean, there's some decent volume today, but nothing like crazy to worry about. So yeah, Tesla, not so good. Netflix like just awesome earnings, but they did not. But the SPY didn't care. I was watching the SPY. I was watching a couple things, and the SPY did not give a crap about Netflix. I think it was more concerned with tech names that could have some risk coming to them here if things start to slow up. We'll see. We'll see what happens. I'm still really curious how this whole thing ends. I really am. I'm really curious how everything ends. I know everyone else is too. I know you guys are too. Like, I want to see how this ends. Are we going to go into a recession? Do they end up cutting rates? Like a reason, like having to cut rates? I still go back to like 2010, man. And 2010, the chart looks just like what we have here on the daily. I'm gonna go over here and look at Tesla. I almost started to short Tesla again as another play. I did catch downside on Microsoft this morning, so that felt good to get a nice green trade under my belt this morning. I should have held it. I don't know why I did. I know why I didn't hold it, but I wasn't sure that we were going to get all this, like just this continuation. Like here, this could be a second chance at some downside. That could be a really nice opportunity for a second leg down to get down to 334. That might be a trade there. Just keep an eye on the volume and stuff like that. Let me look at, like, I would look at all your time frames. Don't just short it because I said it might be shortable there. Well, yeah, you would want to wait for VWAP, and VWAP is up here. So if VWAP's lined up with 341, you could get a bounce to like 341, 342, right here at this double top on a 15-minute chart, and see if you get a rejection there. Yep. 341.66. 341.49. It is rejecting still. Man, that's upsetting. I'm really upset with myself that I didn't hold this trade. Let's see where those puts are. And I think you did also have, you had a bunch of energy stocks that got downgraded yesterday or earlier in the week, which might help. Oh shit. Tomorrow, if the SPY opens red tomorrow and drops, I know, exactly, because you're saying like open red, like, do we open red like 1%? You know what I mean? Is it like 0.3%? Is it 1.5%? Is it, yeah, I don't know. I mean, you can just go back and just look at your levels, you know. I can give you levels. I have Microsoft up. Yeah, I would just look at your levels and just, you know I have way too many lines on this chart. I was hoping to get a bounce and get like an upside, like an inverse cup and handle to get more downside. Like, wouldn't that have been a really nice setup on a daily chart to get a nice, like a low low volume bounce and take it up to like 430, 428, and then reject for like some nice downside. Didn't happen though. I mean, we should get a bounce at 415, like 415 area. I would hope, because now we're going right back to Janet Yellen saying the banks need liquidity, and this was the first debt ceiling issue. That's when we came out of it. And it took us it feels like it's been like a year. It feels like it's been 6 months since this rally. I remember this day. I remember these days because it took off so fast that you just had to take that long. And then you got the pullback, and then I still missed it for some stupid reason. Look at that pennant. This day haunts me. It doesn't haunt me, but I'll never forget it. I'll never forget it. Wow, we could not hold for 1950.
Who's going to become self-aware first? AI or us?
Look at that weekly chart too. Wow, I didn't. It feels like yesterday. Like, look at that drop in the RSI on the weekly chart. I guess that's what we have to look for. The last time we did that on the weekly chart was in 2022, the Russian invasion. Right? Look at that, just decline right down to zero, or not zero, but 30. And what's it look like we're doing now? Same thing. Look at that. That's a nice level there. So yeah, I'm just gonna.
Impact here in Philadelphia. Our senior markets commentator Mike Santoli has joined us now for his midday word. Also, Kevin Gordon, Charles Schwab's senior investment strategist. Good to have you guys with us. Mike, I'll begin with you. You know what the market could ill afford is tech, and rates start to go back up, and that's exactly what you're getting today.
Yeah, it's been a tough formula. Now, I would take some heart in the fact that there is some differentiation in terms. Was sold in the market. Rates have had a little bit of a hard time getting through 5% on the 10-year. You're going to have the most profitable companies in history report earnings. How negative do you want to be into that strong seasonal period? Not really all played out. I mean, now maybe you don't want to be too negative, but it's just this testing process that has not really let up. 8 of the 17 trading sessions this month, the S&P has had an intraday low within 25 points of 4,200. So they want to either soften it up to get through it, or it's proving that people want to make a stand and say that's enough for now.
Now, what do you make of, look, one of the key questions is, if you did have a pullback in tech, would it be bought?
Yeah.
Stephanie Link takes the opportunity, for example, just one anecdotal example. However, maybe it represents a broader psyche that's out there of significant pullbacks within that space are going to be bought.
I think until further notice, yes, until proven otherwise, because that is still the relative trend is in place there. Now, how much of a pullback do you need before it registers, before you really bring up a lot of demand? There's a lot of air under a lot of those stocks, so that's what the market's going to have to sort out. But I do think that the earnings season is doing kind of what it's supposed to do, which again is the differentiation, and we're trying to figure out, to me, if the next couple of quarters earnings forecasts are plausible.
All right, perfect segue to the senior investment strategist for Charles Schwab, who now advises people to do what?
Well, I think to Mike's point, in terms of the near term, there is a little bit more of a support now from a sentiment perspective, because you've actually seen across the spectrum on the attitudinal side, on the behavioral side, so not just what people are saying they're going to do or saying how they feel, but also what they're actually doing with their money and how they're positioning. There has been more of a washout, and that's what was missing in August when you started to hit some bumps after July. So yes, you get to a place now where it's a little bit more supportive of a rebound, of a rally, but you also need a catalyst to get you there. So maybe earnings season is the differentiator there. And I actually wouldn't look to just earnings themselves. I think you have to sort of broaden the scope a bit and look at revenue, because for all of the cheering about this pickup in the beat rate on the earnings side, we're at around 80% right now. You are sub 60% on the sales beat rate. So that is a widening divergence that typically doesn't work for, doesn't last in perpetuity. And it doesn't have to be that earnings has to catch down. I think you can get some more durable growth on the sales side, but you have to be more, a little bit more sort of nitpicky on what you're looking for on a sector perspective.
So we show rates on the screen now, right? 492 back on the 10-year. What's your view of rates, and how should we be thinking of that in terms of our investment strategy now?
So I still think that, just rates in level terms, there's not just one magic rate, and Mike's mentioned this before, which I think is good, where you just plug and chug, and it's that rate for the entire market. For some companies in some segments of the market, rates don't even matter as much, and it's actually a good thing that rates have shot up if they're earning more in their cash versus what they owe in terms of debt. So I think it does come back to the volatility of rates, and one of our secular themes right now, and what we're starting to see and expecting to see, is this turn back to what was this temperamental era from the 60s to the 90s, where you had more of a persistence in the negative correlation between bond yields and stock prices. That seems to be the case now, although the positive caveat is that it's not as severe as it was from that 30-year period. So, inflation was a much bigger problem. We don't see a repeat of what we had in the 70s or the 80s. The dynamics of the economy are just different. So I think different in a better way. But I would be on watch for that, and especially for sectors that just don't benefit from that environment. And it's your traditional defensives like utilities that don't. Tech often gets a lot of flack for being so negatively correlated with yields, but it's also areas like utilities and areas like small caps to some extent too.
At some point, you're going to run out of time to start discussing whether there's going to be a year-end rally or not. Yeah. You got a real 2 months left. Our earnings season for mega cap was viewed to be one of the catalysts. Yeah. Now, if you're going to have a broader upset, like Joe was talking about the Magnificent 7 going to the Magnificent 5. Yeah. You can't have the Magnificent 5 go down to the Magnificent 3.
No, you absolutely can't. And who knows, maybe it could be that in order to really get a better flush out there, you have to have that faith that these 7 stocks can save us broken for a while. Who knows? That's one of those things where I could see it play either way. A lot of the seasonal lows and even longer-term lows have happened in the final 10 days of October. So yeah, to your point, running out of time for the classic period to unfold. And by the way, the classic period is only like a 5 or 6% gain. It just gets you back to where we were in July. Everyone would take it, but it doesn't mean it has to be some heroic.
I felt like we were going to consolidate, but there was
I'll
still
see you
plenty
later
of
on closing
opportunities
bell. Kev's
that I
always good to see you.
missed.
That's Kevin Gordon. Coming up,
Could have did
4
better
stocks,
on
4
this
bullish calls.
Microsoft
we have
trade.
ownership on the committee on them as
was,
well. We'll do our calls of the day next.
Kind of, it was just, you had to catch it right off the bell, and I was saying that when we came into as it was happening, I'm like, figures, man, look at all those lines. Holy shit.
If AI collects your data in the forest and no one's around to watch it, what happens? Ambition is passion, enthusiasm directed towards a singular goal. I'm in the
damn it. Not sure why it's doing that. Alright, so there's a test of the lows, guys, on the S&Ps. There is a test of the lows with the 9 EMA coming in. And by the way, this is the most shadiest commercial that I've ever seen on CNBC. I can't. Exclusive, powerful, leading industry economists, researchers, blah, blah, blah. Talking about a crash-proof retirement. I don't know. But it is a shady-looking commercial. It might not be, but it is shady as hell looking. If you guys have ever seen it, I'm sure you know what I'm talking about. Alright, I'm going to go take it to a bigger chart and see if we can't figure out what the plan should be here, because I don't want to miss anything.
Good.
Well, there's the level you need to watch. 4,200. We're sitting right there, teetering back and forth, above it, below it, and we'll follow that, obviously, until the end of this trading day, and we'll track that through closing bell, that last hour of trade as well. Let's do some calls of the day. I do want to do Palo Alto Networks, Jace. Initiated by at Needham, $305 is the price target. It's transformed itself, they say, into a stalwart in cybersecurity. You own it.
I agree with that 100%, Scott. I mean, clearly Palo Alto has had a phenomenal year to date. It's up 80%. Revenue growth last quarter of 26%. Now they guided to around 19%
like
revenue growth and 20% EPS growth.
Thursday's,
this stock, and it's recently become profitable over the last couple quarters, but I think cybersecurity is a theme that keeps on giving, and Palo Alto plays positioned perfectly in the space.
Jenny, you own it as well, and as I note that it's down today, it gives me pause for a minute to just wonder if, because
like
Jason mentioned the 80%
you gotta just
whether
wait and wait
investors
for the
are going
trade.
to look
like,
at some of these huge gains on the year, who are feeling a little bit uneasy about where we are, and start to ring the register on some of these names.
I've already taken 2 naps today. That's how long I've been waiting.
I love the way Jason said, though, that it's the theme that keeps on giving. And that's exactly what keeps us in, because we look at it and we say, well, first of all, you can't really look at it on earnings. And the reason has to do with their accounting of revenues and the timing of that. But you can look at it on free cash flow yield. And for our disciplined growth strategy, which this is in, we want a 5% or better free cash flow yield. This is down to 3.4. So on every metric, it's pretty expensive. And we're constantly tempted to, well, we have trimmed over the years, but we're constantly tempted to trim or potentially sell it. And then we go back and we reevaluate the growth that there's ahead. And we know that that free cash flow is going to continue to grow in a way that I think in the whole software space is completely unique. There is, for better and worse, endless, absolute demand for network security, and these guys are the best, and they have the most diversified platform,
Okay, so
the
Bob is
highest
still
free cash flow
sitting
yield
here
within
at-
the peer group. So this is why we stick around. But it's tough when it's
Steph,
kind of expensive the way it is now.
Yeah.
feel
Steph,
like it
would you
doesn't
make the
have the
argument that
liquidity
it's,
that
I mean,
it's
Fortinet
used
is
to
yours,
having.
right? That's how you play cyber?
Yeah.
Let me check it.
Yes. It trades at a discount to Palo Alto. It's also lagged pretty substantially. They had a disappointing quarter last quarter, and the stock fell 20% on the day. I added to it on the day. Hasn't really recovered, but I still like the story very much long term, with bookings and billings growth in the 30%, margins expanding, and I still want to be part of and involved in cybersecurity. I mean, I think that is, I have a lot of confidence in that. The whole total addressable market and the theme for the long term. So you have some bumps and bruises along the way. I just prefer the valuation discount to Fortinet versus Palo Alto.
Let's squeeze in, Joe. I know you have Palo Alto, but I want to move off that. I want to go to PACCAR. Sure. Upgraded today at Deutsche. Best-in-class machinery, they call it. 2024 consensus too low, stock too cheap.
It's not a good.
Give me something on PACCAR.
Should have been the chart of the day. instead of Texas Instruments. This is a company that's growing at 20+% over the last
Wow, that's a
2
great looking
years.
chart today,
The
Joe.
val-
Wow. Woohoo!
That
Look at that. Look at that bounce
and that is
into
a stock
bang,
that trades
and
at
it
the
just
right
got
valuation, a valuation that I know
Got
everyone
its
on the panel
itch
would
in the
respect
dirt.
at low teens.
Right, got
So it's a company that is hitting on all the fundamentals, and it's being rewarded. Shareholders are benefiting from
think
what they're doing, and
after what
we've got
happened
people
with
paying
the,
a premium for the stock price. We own it.
All right.
With
We're going
what's
to take a quick
going on
break.
in
We're going to come
China
back.
that
We're going to get you set up for
you
earnings
might
that are
get
still
some
ahead in the
liquidity,
next
like
24
at
hours.
least
I got
a
IBM.
rally
I got
in-
ServiceNow.
for
I've got
liquidity
Honeywell.
reasons.
I've got Merck.
But-
We're back from Philly at Schwab Impact next.
What is it like? The KW, KR, KRE is no, it's regional. KBW. No. Hold on, let me see here. I will say the positive thing, the positive thing about the SPY is that the selling volume is like kind of consistent, but it's not big. It's not big at all. And it's the same pattern. I meant to show you guys this a while ago. Let me see if I can. So you kind of have two of them. Like you have this here, like you pulled it back, rallied, bounced. So what I like to do is, I was actually going to do a lesson on this, a video I haven't recorded yet because I'm still, you know, I need to learn how to edit and stuff. Like you have this pullback. See, you don't have it there. That's what sucks about it. I was hoping to see a bounce here to kind of take it back to the upside. Just like we did here. Just like we did right there. I was hoping to see if we could do something like this, where you kind of tried to get higher and you couldn't, and then you got some good news. I mean, you still look at that volume, right? You still had some selling there, but this was the debts. This is when the downgrade happened. I'm pretty sure it was here. It was here. Because this here is when this rally is when they got the deal done. So I do remember that. But I was hoping we would get something like this and be able to get a bounce, but we've broken, right? We've broken that low. I mean, it doesn't have to be perfect, but
Well, we're just showing you the NASDAQ. That is not the picture that you were hoping for today, I know.
So if the
Down
NASDAQ's
2%,
going to sell off, guys,
and
I'm going to
sliding a
short
little bit as the
technology.
show's going on.
We're just going to
We'll
keep
see what
it
happens.
simple.
We have more earnings, of course, coming
Stocks
up in the
like
next
Snow,
24 hours. All right,
Roblox,
Steph, overtime.
Uber. If you
today,
consider
IBM.
that a tech company.
What do we think?
Yeah, I mean, I think software and consulting is the story. Look for that to grow mid-single digits. That's 75% of the overall total
Technology,
revenues.
right?
That's going to increase
Technology
recurring
names. I'm gonna be
revenues.
looking
That's
to
going to
short them
drive
if the
margin
Qs
expansion and
are
free
gonna
cash flow. The
continue on
guide
this
at
downward
10.5
path.
billion is key. I think that they will reiterate that.
Jason, ServiceNow today in overtime as well.
Yeah, I mean, obviously the stock's performed really well year to date. It's up 38%. I think for me, I'm really focused on the
He
public
said
sector
the
business.
stock's
That's
done
where a lot of
really
their
well.
industry-
It's up 38%.
A lot of their businesses,
when
again,
there
they
are
had revenue growth
stocks
of
that are up
46% in the last quarter.
150% year
I'm
to
sorry,
date.
revenue EPS growth of 46%
He
and
must
revenue
not
growth
know,
of
just
23%.
like I
So let's
didn't
see
know.
how that works out.
You want to take Honeywell too, because it's
Believe
before
it or
the bell
not, it's
tomorrow.
cruise lines. Cruise lines.
Honeywell's been a little bit challenging,
like Royal
down
Caribbean
60%
was
year to
up
date.
over
Really focused on aerospace here.
130%
I think I look at Honeywell
year
as
to date.
a tech industrial. So they have a diversified product mix. Hopefully we'll see some runway there.
All right, Joe, Merck, tomorrow before
Yeah.
the bell. Personally and in the Joe T, you have this. So what's your read?
Absolutely, one of my favorite names over the last several years. It's really going to come down to Keytruda. We need to see that blockbuster cancer drug revenue come in well above $6.3 billion. Overall revenue, we're looking somewhere around $15.3 billion. Analysts have been raising estimates on Merck going into this earnings report. So it's easy to say by the pullback, they're going to need a little bit of a better than expected earnings report here, I believe, for the stock to rebound.
All right, good stuff. Thank you for that. We'll take a quick break. We got final trades next.
I was thinking about trying to maybe putting on like a hedge position, but I feel like it's more trading, just wanting to trade. Because if we really start selling off and find ourselves in a market like we were in last year or 2 years ago, whatever it was, everything's gonna sell off. Like you can't just be long oil and think oil's going to go up. Like energy's going to get sold off, like the stocks and energy itself. In a bear market, when they really hit, like it's everything across the board. I wouldn't even be surprised if they started selling treasuries. Like that's how nasty it can get. I don't want to see that. I mean, I do, but I don't. I just want to make sure that I'm positioned for it. Like, there's no reason why Coinbase can't come. See, that's only $1, man. Fuck. So I think like I think the biggest our biggest
That's BA Boeing.
I was going to say, guys, I think our the best thing, the way that I want to be positioned, the way I want to be positioned is tech. I think tech still has a ways to go, right? The S&Ps are at the 200-day. The Qs are so far away from the 100-day. I might see if I can get myself some something going on there. And I'll let you guys know what it is that I do in a second. I mean, that's a nice pattern there, guys. I can't not say that that isn't a nice pattern there on Microsoft.
42.38. That's the level, the 200-day moving average, so to speak, that longer-term trend line that some traders are watching. Keep an eye on that. And of course, the tech-heavier Nasdaq Composite Index down 254 points, 12,885. That represents a near 2% decline. Really getting heavily hit right now on some earnings results, especially from big technology. Now, if you take a look at interest rates, that's part of the story as well.
Damn it. Those 335s, my people, my beautiful people, they're up to almost $180. It's over 100%. Foolish of me to let them go. Wow. Unbelievable. I am going to start... I mean, I got paid. My job isn't to catch the whole trade. But... you know, I need to... I don't know why I've been trading so weird lately. I know why. This thing, to me, this morning didn't really... I mean, it told you who was in control, but... you know, you have a nice double top here, and off the bell, I called out that 346 area to, you know, that's where you would like, where I would like to end, like to get short, and then this thing just like, you know, it was making lower highs, and just sellers were in control, but for a little bit there, you didn't know what you were going to get. I didn't know what I was going to get with it. You know, because if I would have got, you know, that's the thing about buying options and timing your options. It's like if you get short the stock, that's fine. You know, it's a lot easier to just sit on it and not have to worry about a big explosion candle upwards. And you know, these bounce backs can really kill you. And if it just sits here and bounces, like, you know, you're still, you know, you're going to go red, even if you buy in the money. But I like to live dangerous, so. Just like now, there's no way. Wow, they're at $200, guys. I got those at 80 cents. Oh shit, they're at $200 or $2 right now. Wow. It's whatever. That'd been a nice $2,000 day, huh? But I'm fine with what I did. I'm okay with what I did, you know. Like, you see all this chop here last night. You kind of rallied today and double topped, and I was like, I just was not taking a chance of my goal. My goal was to really sink my teeth if we did try to bounce anywhere up in here, and that's what I was curious to know if we were going to do or not. That was my thoughts this morning. Like, are we going to go up to test this pre-market high? And the way we were just going up and down and up and down, it's like it had no problem going to the upside this morning. Man, I feel like I want to enter it.
You know, back in 2000, the bond rates peaked in February, and then
320s.
2007, the same thing happened. So I expect both peaks to be.
Thing is watch the market. I can't pay up for these. Like, I can't pay up for it. Can't pay up for it.
General Motors is trading at 4 times. And is that cheap enough now that it's
last year when at around 4 times earnings, very, very low. They're obviously not there anymore, and you've kind of gotten out of that one. But there's another one that is in that range now, and my guess is, given what you've cited, you want nothing to do with it. But General Motors is trading at 4 times. And is that cheap enough now that it's priced in all of the potential macro and industry headwinds that could be coming?
Well, you know, it's funny. General Motors is a pretty interesting stock. And value managers like me, we tend to look for stuff that may have some difficulty getting through, but it's just so darn cheap that you need to go there. Having said that, it's really tough to buy General Motors really at any price if you think, like I do, that things are going to slow down before they speed up, especially in the middle of.
All right, if anybody out there is short or you
like
do
Target
have
and
positions
others that are
on,
also getting really,
the House
really
is
cheap.
voting.
Yeah, but again,
okay,
I think
and if
caution, you know, discretion is the better part of
Hungry
value.
government
at least
launches
for
a
now.
new
So tell
subsidy.
me a little bit of, you know, a lot of people are starting to look back. We've seen the utilities snap back from their recent lows, consumer staples, you know, defensive parts of the market that have not performed well so far. Would you stick your toes into those parts of the market?
Yeah, well, the devil's in the details there, Kelly. Like the idea of defensive, but the problem is stuff like, I don't know, staples like
they have
Procter &
started
Gamble,
to
there's hardly any growth. Yet the multiples are quite
on the
high.
new
It's not like
Speaker
Verizon
of
where
the
there's hardly
House.
any growth, but you're not
So
paying
this
up
market
for it.
could get a
like
pop.
stocks
I don't
like
know if
Verizon
it
where
will.
those
I
earnings
don't
weren't
think it
great.
will.
Yesterday they were okay.
But
the
you
stock
could
can
get
go
a
up because
pop
the worst didn't happen.
in hopes
Look
that
at
they're
Google.
getting
Google's earnings
stuff
were
done to
pretty
be able
darn
to
good,
come up
just missing a
with
little on
this,
the cloud, and the stock's down 9%.
thing that they have
I like
in
the other
November.
side of it.
And so do you think there could be more downside to
Just
come
putting
for
it
the
out there
kind of
so you
former
guys
high
know.
flyers of the market? And
If you have any
I mean, some of the
positions
PEs, even in Microsoft's case, are not that elevated. Even Nvidia's is not, you know, crazy high by some of the historical standards
that's
that
a
we've
nice
seen.
trade
So
there, man. I was
think
just
one of the
looking at that
questions people are
too.
going to ask themselves is, should they
Just
go
like
into, for instance, the Mag
even
7
buying
because
it.
they think that they're the new staples and can be
Right,
growth in a
say.
no-growth environment, or do they steer clear of
It's
them
just
because,
like,
to your
we're
point, they
right
might have more
there.
downside?
If
You
we
know,
crack,
I don't think there's a disaster coming in the Mag 7, as you say, but I do think it's
got room.
awfully hard for me to imagine them outperforming in the
got
next year
room
like they
if we
have in the
can
year
crack.
that just went by. That's especially true because expectations now
I
are so
just
high.
don't need to be
Today,
the person
Microsoft's
that
up
buys the
2.5%
bottom, you know what I mean?
with terrific earnings. That was a
I
great
had-
report.
I
But
mean,
it's
I
not,
seen
you
it,
know,
but
the,
I
the-
figured
the
we
mirror
would
image is Google had
bounce.
a mediocre report. It's down 9%.
Like
So
I seen this
they're
bear
going
flag
up
we were
less,
putting in,
they're
and
falling
it was like
more.
I
That's
figured
starting
we
to
would
scare me
like
too.
bounce
So
to go
again, I'd be
test
cautious.
it,
Amazon may
reject
be
it,
one of the
and
ones in
then
that category
start
that
the
you relatively like or thinks it has more of its destiny in its own hands. And
the
real quickly
sell-off,
before you
but-
go, you are among those who like the healthcare trade still?
Not to be the
I do.
case.
I mean, and I've been wrong and wrong and wrong. But I think here you've got companies like Pfizer and Johnson & Johnson that still can't get a bid each day, and they're not plummeting, but they're slowly going down. The yields are going up. Again, in 3 months, in 6 months, if we're in a much different economic situation, those stocks which are trading at their low end of their 10-year historic range are going to be real attractive to investors, I think.
All right, we'll check back in another couple months.
Terrific.
Chris, thanks so much.
Thank you,
Appreciate you
Kelly.
coming in today. Chris Crisanti with MAI. Let's pivot now to the financials, where shares of the investment bank Stifel are down nearly 6% now after reporting earnings per share that were 69 cents lower than what the street was expecting. The miss was thanks in part to a one-time legal charge for an SEC investigation into off-channel communication. That was a 58-cent drag on results. Stifel, however, did pick up its 13th straight quarter of record net revenues in its global wealth management segment, in contrast to that weakness we heard by Morgan Stanley in wealth management last week. For more here, we're joined by Stifel's CEO, Ron Kruszewski. And Ron, it's great to have you back. Welcome.
Kelly, great to be here.
I should note that no one's in a great mood trading the banks. The KBE and the KRE are both within a couple bucks of their lows this year. What do you think that's all about?
You know, look, I think financials are oversold. It's been a tough environment.
They
with,
are oversold.
Again, the same story as interest rates.
Nobody wants them.
As with an inverted yield curve, with investors looking for yield everywhere and depositors looking for yield, and put on top of that basically quantitative tightening by the Fed, it's not been a good environment for banks. But this is where returns are made. As your last guest said, I don't see a big recession here, and some of these classic value stocks like financials are oversold.
So with that also, I want to just show everyone what Bill Gross's thoughts were. He tweeted
210
or said on X a short while ago that he thinks
on
the regional
Tesla. I'm
banks
gonna
at
watch
some point,
Tesla.
maybe not yet, are looking attractive here. This was the first of kind of the first part of his two-part thoughts on the matter, where he says, you know, it's kind of like catching a falling knife. He says, I'm waiting a few more days, but they are great long-term holds.
It's weird. I usually don't start
So there are a lot of
positions this
investors on the
late.
sidelines, Ron, and maybe they, you know, I don't know if they're waiting for it to break to new lows or if they want to hear something from the banks they haven't heard yet to be buying in here.
Again, you know, the economy, everyone, you and I talked back in July, and the economy and everyone is re-rating to a 5% risk-free rate.
Because
and
like, all
the
these
banks will
options are just
adjust.
way too
And I
expensive
think that the banks and
dicking
basic
around at 1 o'clock.
cyclical stocks will do well. And you've got to be careful about the high PE stocks.
I
And that's
could
why
trade something with-
we think the high PE stocks could come in. The more classic value stocks will rise, and the
Just
S&P
'cause
doesn't really go
I
anywhere.
don't want to
I said that to you back in July.
I want to make
and
it worth it,
hold
but
that
I feel
today.
like if I
Yeah,
put up
and
enough
as
capital,
it's borne out.
and then
So what did you do
I
in
get
wealth
like a
management?
reversal,
What
and
speaks to the
something
strength?
stupid happens,
You
like
feel free. I mean, was this, you know,
something comes
market share
across the
gains, or is there a
news, and it's
different,
like,
you know, business
yeah,
segment or
the
client
war's
mix
over,
that you're
everything's
facing that
cool,
is contributing to
Powell
these gains?
cuts rates.
No,
and I'm in
we're
a trade.
definitely
Like an
growing in
idiot.
wealth management. You know, we
That
did
would
get
be my
an
luck.
award, which was J.D. Power. We were ranked for employee satisfaction, which is important. It means advisors like working at Stifel, and that has resonated throughout our recruiting. Happy advisors mean happy clients, and that business has been a consistent grower, not just in the last quarter, but really for almost the last 20 years. I said this morning, Kelly, though, I feel like Bill Murray on Groundhog Day, because for the last 8 quarters, it's been the same thing. Our wealth management business rises, and our institutional business declines, which is happening across the industry. And it just feels the same every day. If my alarm clock plays I've Got You, Babe, I know I'm in the movie.
Yeah, I should have played it as your intro music, I
should've.
think. Yes. Net interest income is up a bit. Is it going to go higher, or do you see some headwinds there?
I see headwinds for across the industry. I think net interest income is based on balance sheet growth, but I think net interest margins
Might be a nice double bottom
across
there
the
on
industry
Tesla
are
right
at
there.
highs. But as that number declines, that our institutional business will pick up. And that's why
Let's
you
see if
look
we
at
can get a
Stifel or
bounce.
companies
Let's see
like
if we
us
can start
because
bouncing.
we are
Contrary
at
to-
really low points in our institutional business. It really cannot, get much slower, the business.
In terms of
it's
demand,
slow.
commercial demand for loans?
Well, again, I think we spent
wanna see
a
if we can
decade,
start
or
to
since
get a
the financial crisis, the trade has been raise capital at zero rates, put leverage on it, fix the business up a little bit, and sell it to someone else at low rates with more leverage.
Sounds like private
And-
equity, yeah.
Well, that's what it's been. And so, as long as you could have leverage, put a little air in the tires and sell it with more leverage, everyone was making money. That trade is not available today. And the whole market about how you allocate capital and raise capital in a rate environment, which I think is now normal. I think, we're not going back to zero rates. The Fed's not going to do that. And so we're going to be, somewhere between, call it 2.5 and 5, depending on cycles on the short end. And the 10-year is going to settle right here around 5%. And the market will adjust to that. It's just taken a little while.
It's really interesting. Obviously, it's a headwind for some of the investment banking business, not just IPOs or advisory or that kind of thing, but even lower muni bond and debt issuance. I thought that was interesting, and maybe that reverses somewhat going forward. I want to ask you a really wonky final question, but with big implications. And we did talk to Randy Quarles about this yesterday. He had some concerns. I don't know how much it applies to you, but what's your take on the Basel III endgame?
It does not, fortunately for us, it does not have a big impact. Ironically, we might even get a little capital relief. It's a technical matter. But as it relates to our largest banks, I think the Basel III endgame is over the top in terms of causing our banks to have too much of a capital buffer. It will make us uncompetitive, and this impacts the economy. I mean, we need banks to be competitive. They need to be sound, which they are. But some of this, where you're talking about 20% increases in equity levels, will find its way back into impacting loan availability and the economy. So I'm hopeful that the Fed was serious when they said that they'll take comments from the industry, and I'm concerned if they don't.
I just, Quarles had some concerns. He said liquidity should come from the Fed, not from capital. The Economist had a piece very much supportive of the idea of raising capital and basically asking the question, what other option do we have in a crisis, especially if the next crisis, if the fiscal piece, if the government is somewhat sidelined?
Well, again, we have capital rules. We have international. We need to compete this. But what is happening in the United States is I think we're overcapitalizing the banks from a competitive perspective, and we need to think about that. And we also need to think that in a capitalistic society, the Fed was created to be a lender of last resort. That's our system. So I'm not going to criticize that system. In a time of crisis, liquidity does come from the Fed. I think that's a basic, fundamental part of our U.S. Capitalist system.
Yeah, more or less a codified one. Ron, I appreciate always getting your thoughts on that matter, bond yields, everything else that you mentioned. It's a great service. Thanks for your time today.
Thank you, Kelly. Have a great day.
Thanks. Ron Kruszewski is the CEO of Stifel. Meantime, the latest floor vote for a new House Speaker is underway. Is the fourth time a charm? Emily Wilkins on Capitol Hill with the latest. Emily?
Hey, Kelly. Well, things are looking very good right now for Mike Johnson. He is the Republicans' latest nominee for Speaker, and it looks like there's a very good chance that he could be the next Speaker. It's a roll call vote. We're going through the alphabet. We've just hit the E's, or maybe the D's.
Johnson.
But the important thing is that at this point, we don't have any Republican who has voted against Mike Johnson. That includes sort of your more moderate members from Biden districts like Don Bacon. That also includes members like Tim Burchett, who did vote to oust Kevin McCarthy. And so it kind of seems across the spectrum, Republicans are united behind Mike Johnson. Of course, we need to get through the entire roll call vote before we can say that officially. Johnson can afford to lose 5 Republicans just because of how the absences shook out today. But at this point, folks are very confident. This is a much different vibe than what we had during the Jordan vote or any of the Jordan votes or even around Scalise or Emmer. You can really feel that folks are united, that they're confident, and that they are ready to start getting to work again, just because there's so much to do after 21 days of no speaker.
Yeah, and there's palpable excitement that we could finally have a new leader, but also a lot of concerns about, to what extent he can marshal support for some of the key things that need to happen. I guess, he told New York Republicans there would be no shutdown. He would help on SALT relief. There's obviously a lot of debate over foreign aid. I don't think he's been a big fan of the money we're spending in Ukraine. So a lot of big policy issues for him right away.
There are, and of course he's going to have to figure out how to navigate some of these. Certainly, as you mentioned with Ukraine, he has been opposed to most recent aid packages, but the fact of the matter is that a lot of Republicans are still supportive of that, and all of the Democrats are still supportive of that. So he's going to have to figure out ways to work with President Biden, with Hakeem Jeffries, with the two leaders in the Senate going forward. But, coming to government funding, which I think is one of the most critical things, because you've got that November 17th deadline. I've been talking with folks this morning, staffers and lawmakers, and it seems like a lot of them are saying, look, when it comes to Mike Johnson, we need to give him some grace. We cannot blame him for the things that we were frustrated about with Kevin McCarthy. We need to give him a little bit of leeway. Mike Johnson himself has put forward a plan. Basically, the House has 8 long-term funding bills left that they need to pass. He is hoping to be able to actually get through all of them before November 17th. But of course, even if the House does, huge if, they are going to need to pass some stopgap funding. But it sounds like more members who were opposed to that under McCarthy are now going to be more open to that if Mike Johnson can prove that he is very focused on getting those full-year funding bills passed.
All right, Emily, we'll check back in soon. We appreciate it. Emily Wilkins on Capitol Hill. Coming up, home builders are on track for an 8th straight week of losses as mortgage rates have jumped a full point. Is it time for Fannie and Freddie to step in? One strategist says that's a very real possibility ahead of next year's election. He'll join us to explain. But first, timeshare company Travel and Leisure, formerly known as Wyndham Destinations, hitting a 3-year low, down about 50% from its pandemic high. The company just posted a beat on the top and bottom line, though, and is seeing a pretty major shift in its customer base. The CEO joins us next to explain. As we head to break, here's a look at markets. Dow's lower by only 50 points, but you can see the big declines are in the NASDAQ, down 2% today. The S&P down 1.2%. The small cap Russell down 1.5%, and the 10-year yield continues to creep higher at nearly 4.95 at the moment. We're back after this.
This is The Exchange on CNBC.
Let's see what we can't. See if I can't find a trade this afternoon. Google's trying to make a little bit of a higher high. I haven't looked at Apple. Apple doesn't look too bad. Don't look too bad. I missed semis today, which is crazy. Oh, it's gonna start. Never mind. Now I see the pattern. Now I see the pattern. I was gonna say I was gonna go grab a snack real quick and then just kind of scout out the SPY and see if there's like a couple scalps or something, like, you know, a few 25, 50-cent trades to be made. I was thinking it would be nice to retest up here, but it obviously didn't care to do that at all. So yeah, I'll be right back.
shares of Travel and Leisure are down after their earnings this morning, only about 2%. The world's largest timeshare operator beat on the top and bottom lines, but lowered fourth quarter and full year guidance. A highlight was its vacation ownership business that saw an 8% year-on-year jump, which it says is also recession-proof because of its prepaid model. In fact, 80% of its customers have fully paid for their timeshares, with the large majority of new buyers being millennials and Gen X. Joining me in an exclusive interview is Michael Brown, President and CEO of Travel and Leisure Co. Michael, it's good to see you again. Welcome.
Great to be back on your show. Thanks.
When you say, I'm not that familiar, I have to confess, with the timeshare business. When you say they fully paid, how big a price tag do these units have?
Usually the average transaction for vacation that's in perpetuity is between $20,000 and $25,000. So when we say people have fully paid for their ownership, when they're deciding to go on vacation this year, they're only paying their annual maintenance fee, which is on average about $1,000. So at a time when inflation's high and hotel rooms are at all-time high rates, people have already paid for it. So the decision to go on vacation, which gets to your point of being resilient and recession-proof, they're going to go on vacation because they've already paid for it years ago.
And where are the most popular places, both in general and for some of your younger customers?
Well, things have changed pretty dramatically in the last 2 years. 22 was the year of revenge travel, where people were going anywhere and everywhere, short-term and mid-haul, short-haul and mid-haul. This year in the summer, we saw a return to long-haul vacations where people had not traveled for many years until prior to COVID. Cruises were big, Europe was big, and what we're seeing is a normalization back to U.S. travel. And I'd expect to see that, a lot of U.S. travel in 2024. As for our millennials and especially Gen Xers, we're seeing a lot of urban travels. Our most recent resorts have opened in Portland, Austin, Texas, Nashville, Tennessee, and our newest resort is in downtown Atlanta overlooking Centennial Park. So urban destinations for quick getaways are super popular these days.
That's really surprising. I mean, not least because places like Portland have had some challenges with, law and order in recent years. And who's going to downtown Atlanta for a vacation?
Well, oddly enough, the way people are vacation today, they're looking for short getaways, but they're also looking to leverage multiple destinations. So we are very prominent in Myrtle Beach, South Carolina. The panhandle of Florida is super popular. Orlando, Central Florida, where we're based, is returning with a lot of strength in late 23 and in 24. So what you'll often get is a visit to downtown Atlanta, enjoy a lot of the cuisine or a lot of the great museums like the Georgia Aquarium or the College Football Museum for 2 days, 3 days, and then they'll pop across to a beach and enjoy a longer vacation.
I was watching it all.
It's just
1, 2, 3, 4, 5, 6
diversification of the experiences. And
I'm like, yeah, AMD
downtown
just gonna
Austin,
sit around
Texas,
here
that's
and
where
double top.
Formula
Remember I talked about it
was
looking like
this
a
past
spider
weekend.
yesterday, just putting in this
So people are getting to
pattern.
urban destinations, and of course, I didn't even mention New York City, where people are year-round.
Crazy,
yeah,
man.
and we just showed your price to earnings
It's
multiple.
so insane.
It's 6,
Seriously,
which is
it's so
quite low and
crazy.
probably suggests
It's the
people's
second
concern about the
time.
macro environment. A little bit of what you're describing
volume's
going into
really
next
low,
year.
I will
so
say that.
If you look at those trends and
But-
that consumer behavior, I can understand. Okay, it's $1,000 to go on vacation. You have to get those plane tickets. That might still be an item that people have
You're an
to
asshole.
drop if budgets are getting a little tight.
Fuck on.
Well, I think
I'll be
a
right
few
back.
things. Let me just talk. Price to earnings multiple reflects a lot of uncertainty that investors have of where the economy is going and where interest rates are going. That doesn't change our underlying business. You said it in the intro: 5 to 7% total growth this year, with our core vacation ownership business being much higher than that. What we see from our consumers, though, is if the price of airfare becomes a concern and you're living in Pennsylvania, you're going to change your vacation, get in a car and drive to DC and enjoy the museums, or drive down to Myrtle Beach and enjoy the beach, or further south, like Orlando at Disney. So our consumers modify their behavior. They don't stop going on vacation.
All right, Michael, thanks for joining us today on those earnings. It's always good to check in with you. We appreciate it.
Thank you for your time today.
Michael Brown, CEO of Travel and Leisure. Coming up, Alphabet's the worst performer in the NASDAQ today, while Meta has handily outperformed its mega cap tech peers this year, basically 3-1 since Jan 1. Now it's under scrutiny from state attorneys general. That's ahead in today's Tech Check, along with the preview of its earnings report tonight. And as we head to break, here's a look at the sector heat map. communication services is the biggest laggard today, down 5% on that tough Google day and its worst day in over a year. Meanwhile, consumer staples and utilities are the only two sectors in the green. We're back after this.
Hydrating.
Welcome back and good day, everyone. I'm Tyler Matheson with your CNBC News update. The Israeli government said today that more than half of the hostages being held by Hamas in Gaza have foreign nationality. The estimated 220 hostages have foreign passports from 25 different countries, including 54 Thai nationals. The government also said 328 people from 40 countries are confirmed as dead or missing after the October 7th attack on southern Israel. President Biden and the Australian Prime Minister holding a joint press conference at the White House shortly. The two world leaders are expected to discuss defense strategies in China, Israel, and Ukraine. President Biden said the two nations are committed to keeping the Indo-Pacific region free, open, and secure. The visit expected to end in agreements about how best to deter and compete with China. And the Manhattan District Attorney said Marvel actor Jonathan Majors will stand trial at the end of November. Majors was arrested in March for an alleged domestic dispute and is facing misdemeanor assault charges. The Loki actor has denied those charges. Kelly, back to you.
Tyler, thanks. I'll see you shortly. Tyler Matheson. Let's get a check on the markets now with the Dow low down 152 points. We're just off that level right now. But look at the NASDAQ down 2.25%. The S&P down 1.4. Holding up the Dow, by the way, are Travelers, which is having a nice day, and a couple of other unique situations. Higher interest rates are part of the reason why we're seeing this renewed pressure. The 5-year auction was poor top of the hour, and that's been pushing the long end higher, as we just mentioned. As for some positives, Waste Management is having its best day since the start of the pandemic after an earnings beat fueled by higher prices. It's up 5.5%. And on the flip side, ADP is among the worst names in the S&P. having its worst day in nearly 2 years, despite an earnings and revenue beat. Earnings beat, revenues were in line. They gave a more narrowed revenue outlook for one of their HR-related segments, but still down more than 9% today. And TransUnion is coming off its worst day on record and hitting its lowest level in more than 6 years after missing estimates on the top and bottom lines. The company also cutting its forecast, citing worsening macroeconomic conditions in the third quarter from inflationary pressures and rising interest rates. That was yesterday, and it's led to a flurry of downgrades and price target cuts on the street today, including Bank of America double downgrading the stock from buy to underperform, slashing their price target from 95 to a new street low of 44, and saying they expect the slowdown in consumer lending to persist into the middle or late part of next year, and are hard-pressed to identify an opportunity for material upside unless the macro environment improves. That's another 6% drop for TransUnion today. And then coming up, it's not just them. Equifax nearing a new 52-week low after cutting guidance in its most recent report. Management blaming the weaker U.S. mortgage market, saying they expect credit inquiries to fall 34% over the full year, down 3 points from their last guidance. Up next, we will look at whether reforming Fannie and Freddie could answer what the housing market has been looking for. And also want to bring your attention to shares of Ford, with the Associated Press reporting the automaker is near a deal with the UAW that will end the 6-week strike. Shares are in the green by less than 1%, though. We'll continue to follow the story. The exchange is back after this.
Come on now. It's a nice resistance level up there.
Possibly have.
Welcome back. The home builders are under pressure again today, despite new home sales climbing at the fastest pace since Feb of 2022 last month. Yields are creeping back up. The 10-year yield now back above 4.95, and Taylor Morrison reported a slight earnings miss, a drop in revenue year on year, and those shares were down nearly 4%. Let's get to Diana Olick to dig a little further into what we've learned today. Diana?
Well, Kelly, I think there's this pull going on with the stocks right now between those higher mortgage rates, as you said, and the Taylor Morrison earnings, and then between that
much better than expected new home sales report. In fact, new home sales were up 12% month to month, 34% year over year, much better than expected. And that's likely because these are signed contracts in September. So people out shopping during the month, and mortgage rates actually dropped a little bit in September, down more below 7.5%, not close to 8% where we are today. And so you had those buyers come in. And we're also hearing much more about cash sales from the builders. In fact, we had the CEO of Pulte on yesterday, and he said about a little less than a quarter of his buyers now are all cash buyers. And for those 55 and above, half of them are using all cash. So that's where you're seeing this demand come in. But I think for the future going forward, the builders right now are lowering, they're much lower on supply. That is, that they had lower supply in September than they did in August, and we continue to see that shrink. They're also showing lower prices. Prices were down 12% year over year. That's a median, so it may be skewed toward who's actually buying the homes. That is, more people buying on the lower end because affordability has been hit so hard. But again, they're using all incentives that they can and buying down those mortgage rates. We're seeing that very heavily with the builders right now, which is going to cut into their earnings going forward. Kelly? Great point. Diana, we appreciate it. Our Diana Olick. The pain of 8% mortgage rates could also speed up reform to Fannie and Freddie, according to my next guest, who says one option is bringing them out of conservatorship and allowing them to purchase mortgage-backed securities on their own, something that could potentially lower home borrowing costs. Joining me now is Jarrett Seberg, Financial Services and Housing Policy Analyst at Cowen Washington Research Group. Jarrett, welcome back. Good to see you.
Great to see you. Thank you.
I chuckled a little because you kind of said, look, this could really make a difference, and it's very unlikely that this opportunity in this moment will be seized.
Yeah, excuse me. Fannie and Freddie have long been the shock absorbers in the system. The problem is when they're in conservatorship, they just can't perform that function. There's very hard caps on their retained portfolios. They have a little bit of space, but probably not enough to really make a difference. And so really, if you want to get that shock absorber back, the only option probably is to restore them as free, independent companies.
I think that should be no problem for Congress with the new new leader. What's his name again?
Johnson.
Johnson. Thank you. See that as no problem. I'm sure that'll be their first order of business.
Listen, if we can just get the government funded and extend the flood insurance program, housing has enough hits. We don't need flood insurance to expire on November 17th. Let's set our immediate priority for the House much more narrowly. Reform, though, doesn't have to involve Congress. It can involve, our friends at FHFA and Treasury trying to do it administratively. That's what the Trump administration tried to do. And I think that option probably is ultimately, how the GSE conservatorship ends.
I think the issue is that the broad public feels like they're in the timeout chair because they were naughty and they caused the housing crisis and the financial crisis. And if we, kind of let them out, they could cause problems all over again.
Well, I definitely agree there's a political problem here. And I think the political problem is that the status quo, right now, this extra 130 basis point spread is a real hardship. But over the last 15 years, the status quo has generally worked. So you get no credit if you're a politician to changing that. But if you change it and something goes wrong, you're going to get all the blame. And so, the political dynamics here are really a mess. And it's why this conservatorship has continued much longer than anybody expected.
Lastly, and most importantly, what would happen to mortgage rates if Fannie and Freddie were unleashed to go and buy mortgage-backed securities?
Well, I think right now the view is that the rates are about 130 basis points rate relative to the 10-year, wider. And so the idea would be if you could bring rates down even 100 basis points and ideally 125 basis points, you might be able to see that first number as a 6 rather than a 7 or an 8. And we know that consumer behavior, when the first number is a 6, they feel much more comfortable getting into housing.
Indeed. And I do think there will be more calls for efforts to address mortgage rates, especially as the election heats up. Jared, for now, thank you. We appreciate it today.
Always a pleasure.
Jared Seberg with Cowen Washington Research Group. Coming up, Snap losing steam. Shares initially popped as much as 20% after they beat on the top and bottom line after the bell yesterday, but they're down 5% now after revealing that some advertisers paused spending following the Israel-Hamas war. Snap has served as an early barometer for ad spending the last couple quarters, so will Meta report the same problems this afternoon? We'll talk about that next.
I was trying to look at. I was really thinking Google was a nice short there. It's just the question is, does it hang on to that level right there? And then the next level you would look for. Well, you have a gap fill actually here. And then there. That's what I'm watching. See what happens.
Another big day for tech earnings. Meta on deck after the bell. Deirdre Bosa has more on what to watch for in this print. And yeah, I mean, after a busy day already here, Google and Snap and everything else, Deirdre.
It's big tech earnings week. It'll continue to next week, too. So Meta, it's largely a cost story. It needs to show investors that it can balance its AI and metaverse ambitions with Zuckerberg's year of efficiency promise. What helps is that the company is lapping one of its worst quarters ever when Apple's privacy changes slammed its ability to sell targeted ads. And what a difference a year makes. Meta still gets nearly all of its revenue from ads on its family of apps, but it's now using AI-powered tools like Advantage Plus to compensate, and the market itself is getting stronger, as we saw from Snap and Google. Now, that combined with major cost cutting this year, that has won goodwill from Meta investors and made it one of the best performing stocks this year. So expectations are high and costs are back in focus. The street is watching operating expenditures that could be upwards of $100 billion and capex of $40 billion. Net income, free cash flow from the ad business, that will need to offset those gigantic costs. Also want to mention Amazon, Kelly, because it reports tomorrow. Costs a key part of that story, too, especially as investors look for a bottom in cloud growth with Microsoft and Google really giving us mixed signals. Could go either way, but remember, AWS from Amazon, that's the largest cloud player out there.
Yes, and after what we've heard, all the more reason with the shares down, all the more reason to listen for them. Deirdre, thanks. We appreciate it. Deirdre Bosa. Coming up, we're looking at 3 more names reporting after the bell. MasterCard has beaten on both the top and bottom lines, 18 out of the past 20 quarters. Bristol Myers revised full-year guidance last quarter on slow sales of one of its cancer drugs.
He
and
has
with the
been
10-year
elected.
creeping back towards 5%, we'll look at how much of a boost
We have a
rising
Speaker
rates
of
have
the
given
House.
Ameriprise. We've got the action, the story, and the trade on all 3 in Earnings Exchange next.
Spy doesn't care.
Welcome back. We've got some news from Capitol Hill. Emily Wilkins with the details. Emily, do we have a speaker?
Kelly, it is all but official at this point. Mike Johnson has easily gotten enough votes to become Speaker. All they need to do is formalize it, drop the gavel, and then it is official. You have had every Republican who was president, got one absence, every Republican, all 220 of them have backed Mike Johnson. From your more moderate members to your hardline conservatives, the Republican Party has now fully come behind Johnson and backed him and supported him. And now that he's going to be Speaker, he's got a lot of work to do. I've heard a couple members talk about passing a resolution in support of Israel, obviously something that a lot of members want to get started on and could easily be bipartisan. But then Johnson's got to turn to the much heavier work of actually funding the government. Remember that November 17th deadline is coming up, and Johnson has released a plan. It's incredibly ambitious. It would involve the House basically passing a ton of legislation in the next couple of weeks and then potentially capping that off with a stopgap bill that would give them time to work with the Senate to finalize legislation. So it's going to be a lot of work. He's going to have to hit the ground running. Congress can probably kiss goodbye to their 2 weeks of recess that they were supposed to have. And right now, really, all we are waiting for is the votes to be finalized, the gavel to fall, and then we will have Speaker Mike Johnson of Louisiana start taking control of the House and getting everyone back to work.
If
Kelly?
I'm not mistaken, he's maybe in his 4th congressional term. So, again, pretty new on that sense. But in this case, with a track record that people seem to be able to rally behind. Emily, we have talked, you have reported that he and some of his supporters, this was very important to them, to not just pass a continuing resolution, but to pass some of these spending bills one by one. What can you tell us about that?
I can tell you that's going to be tough. I mean, these things not only take time, but some of them, like a bill that dealt with funding agricultural, rural areas, farmers, that one got a lot of opposition from Republicans. And when you talked with them about their issues, some said, hey, these cuts are too big. Others said the cuts weren't big enough. And then there was a related issue on there about pills that provide abortions. And so you have lots of different issues to juggle with these bills. Two of them have been so contentious that they haven't even fully gotten out of committee yet. So he's going to have to be working through a number of different problems. And while we have heard some members say, look, we're willing to give him some grace. We know he's stepping into this role pretty fresh. We don't want him to be a continuation of McCarthy. At the same point, a deadline is a deadline. Things have to get done. And I don't think members are going to be fully moving off the positions they had just a few weeks ago because they have a new speaker.
All right, Emily, thank you very much. We appreciate it. Just want to turn for a quick comment back to Jarrett Seberg with Cowington Washington Research Group. Jarrett, appreciate you sticking around. Main implications for investors and for markets, top of your mind?
Well, obviously, it's great news. I mean, it means we're going to get a continuing resolution. We won't have a government shutdown. It's the last thing we need right now. Probably pretty good news for supplementals for Israel and probably Ukraine in order to get something done. That means more military spending in the United States, also positive for the economy. But let's not kid ourselves. I mean, the House can go through and try to pass all these bills, but the House is your adversary, the other party. The Senate is the real enemy. And trying to get the Senate to do all these bills is impossible. So, we may have a new speaker, but the politics on Capitol Hill are the same.
All right, Jared, thank you. We appreciate it today. Jarrett Seberg sticking around for us. Let's turn from Capitol Hill to earnings, which we still have in this very busy week of the earnings season. We're trading consumer health, financial health, and actual health in earnings exchange today. Looking at MasterCard, Ameriprise, and Bristol-Myers Squibb. Marianne Montaigne is here with our trades today. She's Gradient Investments Portfolio Management Consultant. Marianne, good to see you again. Let's start with MasterCard, which is up 11% this year, but just saw its worst week of 2023 last week. Goldman warning the consumer spending remains stable.
Sorry, forgive me. The one thing I can say is we need to test this level. We need to bring it back up here. I'm not going to start. There we go. I mean, this is just like massive sell triggers. Just like, look, no buying. No buying. Like, yeah, I don't want that shit. Oh, nah, man. You can have it. Go, you know what? You can go in front of me. Go ahead. You've been waiting here a long time. Go up in there and just buy yourself a little bit. Nah, I'm good. I'm full. I don't need to buy it. You know what I mean? You just, come on. I'm in no rush. I got all day. Ain't nobody trying to buy that shit. You could just count the amount of 3-minute candles on here. The 3-minute green candles. It's hilarious. I don't know. This is weird. I was hoping, so my goal was to be able to get short here, right? On a test of VWAP with this level. We never tested it. We never tested it, unfortunately. I guess you could say, I guess you could say we tested this low, kinda. We dropped through it, hit it, and then we left it. So the next area I'd watch for would be 418. But I want to see if we reverse. We still have earnings. Who do we have tonight? Meta. Then we have Amazon tomorrow. Apple is the market. I don't know when Apple reports, but I'm going to have to do some research. Oh, fucking Spotify, you asshole. Don't you hate it when you just put levels up and it just goes right to those levels and right off of it, and it's just pinging off of your levels, bing, 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 bing. But where was I? Is this a trade here? Are we getting... I know it's trading sideways right now, but I wonder if this is a trade short. So you know how we solved the problem of why did everything happen today? We go right back to right there. Whatever this time was when everything started. Right? Got this big pop. Bang, sold it off. That was today, right? What happened at this time? 21:15. Hold on. 15-minute. 15-minute chart. 15-minute charts. The Euro USD does not look like that. Hello. Alright, let's go look at the yen. I think there was some yen things going on too that caused all this. DB, TRD, what the hell is... No, I don't need none of that shit. I don't need none of that shit. Give me a 15-minute chart. Oh, my chest. God, I could use a fucking Red Bull right now. What is up with the yen? I guess that's how it always looks. I mean, it is how it always looks. Because I thought we were entering up on that time where they may have to do something with it. I'll be right back. Hold on. could just fucking yell. Like, trade of the day. Like, why and what? Like, what? What? Why AMD? I thought there was some news. I don't know if it was when I was sleeping. I was up at 5 o'clock this morning. What? Like, wasn't there some semi-news or no? Like, this was the trade of the day. It looks like it was the trade of the day, at least. Yeah. Fucking 101 to $95. That's a $6 move in AMD. You haven't had that in a while, because I've been watching AMD, and it hasn't done anything for you but give you like $1.52. So, what the heck was the news to send these things going to the downside? I said it yesterday, too. I was like, man, these things are setting up like they're... Like, this is a trade, right? These are trades that you want to find and put yourself in. Is the directional momentum. You know, that's the trades you guys want to, at least that's what I focus on, because these are the trades that are going to pay you over and over and over and over again. All you got to do is hold them. You get to a target, you take your piece off. You know, I just can't believe I fucking missed it. The day that I don't look at semiconductors is the day they move. It's hilarious. I'm like, why would I look at AMD? It's not moving. Well, that's why, because it just... Fuck, man, that's crazy. I don't get it. I don't get it. I don't know if there was news or what. I'm going to try and find out what was going on with it. But that's crazy. I just... I don't know. How frustrating, right? It's just frustrating. It's just frustrating.
I think that actually has helped a lot of investors. Rob Ginsburg from Wolf has often said over the last several months, you know, as long as it's not dipping below 25K, that key support that we've been watching all year, you know, he's going to remain long on it. And it is exciting for investors because it has really been stuck in this very narrow range of between 25K and 30K. So, you know, holding at about 34.7 right now, a lot of analysts saying that if it can hold at 32, and we'll see how long it hangs out here, but a lot of positive catalysts behind it, and if it can hang at 32, that gives it room to run to about 38 to 40.
Tonight we have to leave it there. Ryan Rasmussen. I almost called you Ryan Reynolds, Ryan Rasmussen. Take it, man. It's good. Ryan Rasmussen, thank you very much. Appreciate you both being here. Further ahead, an under-the-radar name getting crushed after results. Commercial real estate stock CoStar falling short of analysts' expectations. We'll trade it in 3-stock lunch. But up first, SunPower down 17%, tracking for its worst day since 2020. We will explain why when Power Lunch returns. Welcome back, everybody. Oil giving back the majority of its gains since the Israel-Hamas war began. But the big wild card is whether Iran gets involved. And Pippa Stevens has more. Hi, Pippa.
Hello. So prices are higher today, but Bank of America said today that the market is being too sanguine around the outbreak of the war. And so they laid out different scenarios looking forward and what it might mean for oil prices. So they said that if the conflict remains in Israel-Gaza, they see oil at $90 to $95. Any escalation to Iran means $120 to $130. And then in the unlikely event that the Strait of Hormuz were to be closed, prices could get up to $250. And essentially what Francisco Blanch said is that there is a floor under prices right now between Saudi Arabia and their production cuts, as well as the United States refilling the Strategic Petroleum Reserve. So he's saying that all this is not yet being priced into the market, and that exposure by investors right now is about $250 billion. That's about $100 billion less than historical highs. And so there is still room. However, people aren't going full in yet. They're getting upside by buying calls rather than buying the outright commodity because there is so much uncertainty in the market right now.
And about the global economy, which could pull things the other way. One clear downward mover is SunPower, down about 20% today. It seems like every day we're talking about another alter clean energy blow up.
Yes, so SunPower is facing both issues with the broader solar industry and then as well as company specific. And so last night they announced an accounting restatement. Basically, they said that they previously overstated inventories by between $16 and $20 million. And so this is not a cash issue, but it does mean that their cost of goods sold were higher than previously expected. They also pointed to a, quote, material weakness existing in their financial controls. And so while this amount is not that much on the face of it, the issue here is that they are approaching a key level that could breach a covenant with one of their lenders. They said they are in talks with their lenders, and presumably we'll hear more when they report earnings next week. But the threshold is $100 million in liquidity, and as of last quarter, they had $114 million.
What could breach the covenant? Do you know?
So it depends on the different lenders, but there are different triggers in place. And so what they said is they're working with their lenders on waivers that could account for something like having to restate financial. Yeah, exactly.
That could be a trigger. That in itself could be a trigger.
Exactly. So these have a lot of provisions and terms in them. So the issue is that they could trigger on multiple different ways, and so they are in talks with those lenders now.
I was just, I don't know, kind of just sitting here bored.
Let's get to Bertha Coombs now for a CNBC News update. Bertha.
Hang it up.
Hi, Kelly. Israeli Prime Minister Benjamin Netanyahu said today that the country is getting ready for a ground offensive in Gaza. He didn't say when it would happen. Netanyahu's announcement came in an address to Israelis after the Wall Street Journal reported Israel agreed to delay the invasion so that the U.S. can rush missile defenses to the region to protect U.S. troops there. France is sending a naval ship to the Middle East to support hospitals in Gaza, as officials there warn of a collapse of their healthcare system. President Emmanuel Macron said today the ship will leave in the next 48 hours.
Just hold it.
And here in the U.S., the U.S. Postal Service is updating safety efforts in the wake of robberies and attacks of mail carriers. The USPS announced today larger rewards for information leading to arrest and conviction of someone involved in a mail crime.
I just don't see anything making any moves. Tesla is a good thing I didn't short because it turned itself back around. Well, it did just test the 200-day. Maybe that could be, but just don't really trust it. It's kind of like inside. It's just trading inside now. Like, you know, it's kind of just like there's no direction. It's frustrating. We got 2 more days left this week. 2 more days left. So if I don't figure something out, I'm gonna be worried. So it looks like SPY is trying to, I doubt it will, but it looks like it's trying to pull back off of Monday's low. This is insane. This is seriously insane. To be down at 1.5%, and we've moved 422. We've moved 6 points. 16, 17. We're 5 points. 22. Yeah, we've moved 5 points. Yeah, guys, like I say, I'm just gonna I don't know, you know, kind of just keep trying to come up with ideas in my mind. Maybe just keep scouring the internet until I see something. Just sucks, man. It just sucks. Sometimes it's like this. We have Powell aftermarket. We have a lot of data. We're getting GDP and all that good stuff. We're getting jobs data. So there should still be a bit of opportunity, hopefully tomorrow. Oh shit, that's right. We have PCE also. We have inflation data. I forgot about that. We still have PCE inflation data, so I would be patient. Okay, Jesus Christ. Leave the fucking guy alone. thinking about Tesla, but like you say, just gotta watch the reversals. Like this one here, it can just flip right back on you. It doesn't. I don't think it knows what it wants to do. I really don't. It doesn't know if it wants to hang out and stay above the 200-day or dip below it and give us a little bit more of a sell-off. It don't know. Just like I don't know. I don't know. So, don't waste your money on shit that's not there. Don't force it, but I'm still looking at Tesla to see if it decides to do anything. I'm trying to find something that has momentum. I'm just irritable because of all these lines. Like, I can't stand all these fucking lines that I have on my screen. I absolutely hate it. I hate that I can't slide this down with OBS recording. I don't understand. I don't. So, maybe I'll exit out of it and try it again or something. I don't know. Let's see. But yeah, just I'm not going to do anything for the rest of the day. We'll see what these earnings, see what Meta and them do. And that's probably it. Another day going by. Quick day. This day went by quick. So my charts froze up. I'm gonna have to see what's going on here. Let me see if they came back to life or not. I know time and sales is going. Come on. I don't know what's going on with my charts. I'm trying to put I might try to put something on for tonight and into the morning. Come on, where? I don't know. Fuck, man, I'm gonna have to probably stop the stream. I don't care. I'll let you guys know in the comments section if I have to, or if I get some calls or something. I'm not sure what I'm gonna do just yet. The market's still got a little bit of volume to the downside, but the volume altogether is pretty low. What the fuck is going on with my charts, man? God damn it. Come on. Alright, well. I don't know. Maybe you guys will find out on the watch list, because I gotta let this. I gotta get, I gotta figure out what it is I'm gonna do and do it now before the market closes. I got 20 minutes, so. I will see you guys on the watch list. I'm gonna have a watch list tonight. I know I say it every night and I haven't done it, but I got some stuff for durable goods, GDP, and core PCE, because if things, what did I just exit out of? Oh, that picture. Things could get a little worse, just because it would, for short term, it would give the signal higher for longer, but I don't, you know, I don't want to recommend you guys looking at it from like day to day. I mean, you should see it and see where it's at and how things are moving, but other than that, like, I think GDP is going to come in like decent. They said what, 4%. Tomorrow morning is, you still have European. Hold on, let me find everything. So you have, in the morning, you have the EU's interest rate decision. Durable goods orders for us, GDP, and I think this is going to come. What? They have, let's see, previously 2, consensus forecast 4. I mean, we'll see. We'll see. I mean, because the reason why this would go up would be for the obvious reasons, right? Changing of the seasons, right? Everything from school, hunting, Christmas, you know, just, there's a lot going on. So, it just wouldn't surprise me. Spending rose much less. Consumer spending rose much less than initially expected.
Yeah, all good points. I appreciate that, Steve. Thank you, Steve Kovac. Last chance to weigh in now on our question of the day. Speaking of tech, is this trade in big trouble? Head to @CNBC Closing Bell on X. The results are coming just after this break.
When you're looking for answers, it's good to have help, because the right information at the right time may make all the difference. At Humana, we know that's especially true when you're looking for a Medicare supplement insurance plan. That's why we're offering 7 things every Medicare supplement should have. It's yours for
Yep, they're forecasting 4%.
and when you call. A knowledgeable
Could be everything to do with the wars and all that other stuff, so we'll see. GDP sales quarter over quarter 210. Previously 4. So we'll see what happens. Yeah, I might have to cut this stream because I think it's frozen. So if anybody is here, thank you guys for hitting the like button. Thank you guys for stopping by. I need to have something that's a little more entertaining and fun. But you know, so I wasn't going to do the stream today. Come on. Alright guys, I'll see you guys later. I'm just gonna cut this off because I have to. I'll see you guys on the flip side. I'll see you guys tonight on the stream.